is going to mark a trend change in Hex, both in a price trajectory, but also the community as the culture evolves and we bring new people into the ecosystem. There's a lot of more people out there with a lot more money than you guys, and that's who this is targeted at. Is if we can get a set of eyes on this presentation uh, that sees the value in it, I think that the size of the green candles are going to be like probably exceed some of the fractal patterns that I have in this presentation. So what I want to say first is that if you're on your phone or if you're in the car or if you're out and about and you're listening to this on your phone, you're going to want to get back to your computer screen or a TV immediately, because the amount of detail and analysis that we're going to go over in this broadcast is you're just doing it a disservice to yourself if you're not capturing everything, because I'm going to be able to go through step by step. It's one thing to look at a chart and say wow, and it's another thing to fundamentally understand the data that got inputted to give you that result. So, gentlemen, thank you for coming together. These are two of my best friends in the space, and I wouldn't have done this with anyone else. I put some, I put some fishing lines out, asked people, and uh, these guys are the guys that changed the way that I saw markets and gave me the strength to endure and hold and do these things the right way. Um, so we're going to start off with a market, like basically we're going to start off with macro. I guess here's a little overview for your guys. You look at on the left here on the overview, we're going to start looking at mid-cycle targets on Bitcoin, Ethereum, Hex. We're going to look at the dollar. We're going to maybe reference the stock market like in a couple slides, and we'll reference the 10-year chart, the U.S. 10-year bonds chart. We're going to draw comparisons between bonds and in that system, the Fed system, and we're going to compare that with how Hex does inflation better. So the goals here are to create clarity of mind so that you're completely out of the trade, but you're always positioned well, if that makes sense. Like you're not trading, but you always know where you're going to enter, and then you can just forget about it, knowing that the upside is pretty much unlimited as long as you can survive. And then we're going to discuss some of the factors that's weighing down on the crypto market as a whole. Some of that has to do with the premium on the GBTC. We'll talk about correlation and what is a pure market. We're going to discuss hex inflation, and we're going to discuss hex inflation in a way that's relatable so that you guys can understand how much money, dollar terms, is being realized from the system per month. And we're going to compare that against the other two majors, which is Bitcoin and Ethereum. You guys are going to see why the chart does what it does. Like you're going to see it. So, and then another thing we're going to talk about, we'll explain the liquidity in detail. I got a few charts and some of that stuff I just added today that it actually is pretty surprising. So that'll be kind of exciting to show you guys. And I definitely want to address the hedron wall situation because that got blown way out of proportion. And then I want to address just the all the airdrops we've been getting, and I want to talk about the tokenomics and distribution. I don't know why the hell you guys are. I mean, I get it. Everybody sacrificed everything they had, and everyone's waiting to dump to take some money back out on the other side of Pulse Chain. By the way, looks like it's coming pretty quick. Big Daddy RH tweeted today something along the lines of check your SAC balances. So if you have not checked your SAC balances, please do that now or after the show. Specifications. We're going to talk about some of these different charts you see here. We're going to compare some crosses. We're going to look at it against the dollar, talk about the money supply, talk about dominance, like hex dominance, Bitcoin dominance factors. We're talking about the volatility or lack thereof. We're talking about exchange balances, the off-chain bullshit that's going on. Like that's one thing that you do get good from looking at the different exchanges is there's tools that you can go see how much inflows there are of old Bitcoin that's maybe making an impact on the price chart. So our thesis here today is we're going to start back in 1960 and we're going to build ourselves up all the way to current day to show you guys how we got here and why Hex and Pulse are the future of finance and crypto. A new start for all of us. There's a long-term trend here that is an institutional handoff happening between retail and large entities like endowment funds and stuff, or whoever, Elon Musk, whoever. And they're going to try and use fear to shake out weak-handed retail right now. The problem that I see with that, though, is that potentially that there's 2-to-1 bid to ask right now in the books across all major exchanges. So it's going to take, we want to get that price down on Bitcoin because we need to see that capitulation to give traders a new trading range and to allow new entrants to push the price way higher. So then short term, the DXY, the dollar, the US dollar is up and rising. And this is due to the Fed being very hawkish on their stance, raising interest rates and making money more expensive, making the dollar more expensive effectively, and in turn increasing the yield. It's interesting to note that in the hex world, that's all fixed and immutable. And the longer you're in the system, that exponentially compounds in a way that no other system does it. I will also take a look at the total crypto caps and just compare Bitcoin dominance against alts. There's an interesting thing there that Crypto Sniper made a video on the other day, and I want to bring that up. So on the upper right corner here, we got Johnny. I got a couple tweets here. Actually, let me open it up to these two guys if they got anything they want to add here before we get going.
No, I mean I think you're just covering what we're gonna cover, but
Yep.
I just want people to kind of really sit down and really pay attention.
This is probably Wales. This is probably what $2,000, $3,000 deck that I'm giving for free.
Nah, it's more than that. It's 10 to 20x more. Yeah.
I mean I'll take your word for it, bro. Maybe I should shut the stream off quick. You go fucking rethink this situation.
Well, why is that? Right? People don't understand because they have no concept of reality, right? When you go to a major house anywhere in the world where it's financial, financial fucking fashion, whatever the hell it is, any industry, nature of the beast is it's professional level. So there's a cost embedded in producing that work, right? And it has to look a certain way. It can't just be some old rinky dink like this low production quality YouTube stuff where it's just people sharing the information that they know. It's not this organization producing this piece, right? But here's the thing. In the real world, that shit doesn't matter. Production quality is irrelevant. That shit only works on retards. That's a fact.
The way I figured was a lot of the stuff that's in this presentation is stuff that Wales and others have been saying for over a year.
Mm-hmm.
But I figured if I dressed it up and made it look like a raspberry cake, maybe some of you guys would eat it. So Johnny Chaos actually cares about you guys a lot too. He's saying, read the charts, look at the available supply, which you can find on graphhex.rocks, apphex.win, on Hex Daily Stats. You can find it all over. Like there's data out there for you guys.
Yeah.
Look at chain analysis. Like if you see the post below here, you have a post here from Silver the Antidote. We were talking the other night. He said, I asked him if there's something that would be worth discussing. He said that I think, and this is in Silver's words, I think I would just say there is a huge uptick in new accounts buying Hex with fresh coins. More trader types, but over time, some of these migrate and learn staking is better. With the amount of buy support we have seen from the low 12-cent range, it's been impressive to see we have reached 20 cents so quickly. Now, that was not that big much of a surprise to me. Even with all the sharks and high liquid accounts that have been adding pressure, many of these accounts will be exhausted within a week if they continue to sell their trends. This is why I'm so bullish over 21 cents, because for some reason they are happier to sell into the 18 to 19 cent range. Yada, yada, yada. You get the point. Now, when we go to look at the liquidity, you're going to see what's playing out. So without further ado, we'll start off with some macro.
Yeah, before you continue, thanks Silver for the 500-pound super chat, brother. Appreciate you. Carry on.
You guys hear me all right?
Yeah. Oh, just sorry, I didn't mean to interject. Wales, your audio is muted on the wave side. I can't unmute it, but you should be able to unmute the audio so the streams align.
My bad, bro. Should be good now.
All right.
Cool.
And then so let's talk about macro, guys. Let's talk about some macro. So chart on the left is the chart of the 60-year, 10-year U.S. Treasury yield. It shows a huge run up in the amount of return that the dollar gave from 1960-ish till 1980. And then ever since then, we've basically been losing value. If you look at chart 2, the upper chart, the DXY, if you look over here, this is where the monetary debasement began, and the inflation really started. It's when we got off the gold standard. These are 6-month candles. This red candle right here, that's a 6-month candle, but that was like a huge hit, man. When we went off the gold standard, things changed. And what this was, potentially, I think that this could be said that this was a dominance play, where the elite class of people got their policy through, and they changed the way that our money system works. Not for the first time. This has happened over and over and over. And they took their position and they ran up the DXY, and then they sold it all for assets, and everyone got wrecked. These are 6-month charts, so this is over like decades and decades of time. But you could see that in this fib channel here, you can see that there's a clear downtrend that's been going on for 40 years. I mean, I'm showing you that this is the dollar and what it does. So, and then below that, you can see the return that you're going to get on those devalued dollars. It just goes down, 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 down. The interesting thing to note here is that these white bars patterns inside of this circle on the right side of chart 2, top panel, these white bar pattern, this is a fractal of the original dominance entrance play. So it is an inversion of the yield effectively playing out. Fed gets hawkish. People are losing or selling their assets at all-time highs to enter the dollar and be safe, quote unquote, safe in an unsure environment. Bro, I don't know if we're ever in a sure environment anymore. If you're back in legacy land, this is clearly showing you that we're not. So the narrative I'm trying to put forth right here is basically that there was a full system breakdown that happened during COVID. It was the start of the new guard, basically, where all of the institutions figured out that crypto, basically the money's got to go somewhere. It's going to go to the place with the highest returns. Well, this is just a giant cup and handle that's playing out on the dollar, where all these dollars get fed into the crypto system, and it just pumps those prices, and those becomes the new standard. Which is why over here you got like the Bitcoin standard, T-share standard, in a stable economy that comes after you back it with stable economics practices. So this is where we're headed. Let's go to the next slide. Macro. Another slide showing the dollar index on a Fib projection. I'm just saying, like, this is just saying that, crypto at large, not including Hex, could go down for like a year or two, bro. Like there could be a lot of upside here. Look, it's in 2000 at the .com bubble, we were right up here at the last high. This is the highest we've been since 2000. So it doesn't look like it's slowing down to me. I keep seeing crypto charts on Twitter that's saying like, oh, there it was, a DXY turned around. Yeah, it looks like it's turning around, dumbasses. The only thing that turns that around is that the Fed stops being so hawkish. They get dovish and people want it, and then we'll start printing again. Then yeah, that money will flow into crypto. And then we'll talk about the M2 money supply here in a few slides. Here you go, chart 4, macro cycles. This is an S&P projection at scale, 50-year returns against the dollar. Question is, guys, is this a function of a growing economy, or is this a function of an expanding money supply? What do you think?
Expanding.
Yeah, you get.
Sorry, go ahead, brother.
Oh yeah, my bad. You guys can hear my mic, right?
Yep. Yeah.
Yeah. What you're saying with the XY makes sense. I'll just touch up on that point, and then I'll hand it off to Wales. But yeah, that's been definitely a thorn for Bitcoin for quite some time, as we've seen, and that's something that's been mentioned across quite a few streams at this point. And this is a really good depiction, if you consider the hyperinflation scenario of the dollar, which sort of inevitably happens in the future. And I guess with that being said, I'll hand it off to you, Wales.
What was interesting is if you look at the valuations of all assets across pretty much all markets, right, across the globe, what you notice is the same pattern. Everything that acts is just detailed. Interest rates going down and to the right, money supply going up and to the right, equity markets going up and to the right. Well, asset class values going up and to the right. All of that is a function of a depreciating fiat currency. It is not economic growth. So what everybody's been seeing has literally just been a consistent debasement of fiat currencies from one economy to the next. And countries just take turns taking licks. That's really all it is. That's all I got, bro.
Yep. Move on. Look at this, dude. At left chart.
Mhm.
Looking at an S&P projection at scale. People, if we continue to measure these valuations in dollar terms, this is what you're going to get by the year 2040. This is what you're going to get.
And that's
Fucking vertical.
that's-
This is soft. Will's is saying it's going to go vertical. It's going to go straight up.
That's best case, right? I mean, this is assuming things continue at a non-hyperbolic rate, which is what they're currently in now, right? Like, if you look at what's happening across the economic spectrum, not just in Western economies, but also in Eastern economies, everybody is suffering from inflation. Nobody is getting to avoid it. So everybody is going to suffer the brunt of de-dollarization. Is just a matter of how bad are they going to suffer it.
Well, look here. If you bought Bitcoin and look at this chart on the right, chart 5B on the right here, S&P 500 over Bitcoin in 6-month chunks, meaning each candle is 6 months of time. But if you bought Bitcoin back here instead of the S&P, this is basically saying that if you held the S&P, look how much value you lost over 12 years of time. This is showing the strength of Bitcoin. This is showing you're measuring one of the largest markets in the world, the S&P, against the dollar, and then you're comparing that against Bitcoin. Well, Bitcoin's had the most insane returns of any asset in history. And this is showing you, like, if you're not in cryptocurrency, you are in this world where you get to fucking suffer all the consequences of that. And it's just sad reality. And the reason why we do this stuff is because if you see it, you might change your behavior. Like, for me, when I started in this stuff, it was always, how can I acquire more dollars? And then I realized, as many of you did, it's always become, how can I acquire more crypto? And specifically Hex, because as you'll come to see, nothing beats Hex.com. So this slide shows you on chart 6, this is a Google Trends piece where I took the term bear market and the term bull market and compared them against each other to see what are people talking about. And this goes back to 2004. It's interesting to note that during 2009, during the gold run up, Bitcoin was just born. Nobody knew about it yet. People were very bearish, but gold was having a huge run. So fear is what pushes people into little shiny metal, not actual value. Interesting. And I mean, look, we had our biggest bearish spike back at COVID. No surprise there. But look, we're getting increasingly bearish lately, as far as like what people are searching on the internet. Nobody needs to look up a bull market, because you just fucking put something in the machine and it just turns into 10 times. So it's a low effort economy, man. And on the right, we have terms inflation versus deflation. Now you can see a clear trend here that nobody really talks about deflation, but everybody who talks about was basically cognizant of inflation, but not worried by it until COVID. Look, we're on a exponential curve up now as far as what people are searching in trends. Anything to add to that, Wave?
Yeah, this is a really good point. So even just kind of touching up on where the market's at right now, the time element is what is throwing a lot of people off with respect to what's taking place over the last year or so in the market. So with sort of this transition phase, and Wales made a very good point where there's a lot of suffering taking place globally due to inflation. So to put it in context of those that are being hurt the most, they're getting priced out of just about every single asset, on top of dealing with the burdens of a higher cost of living. And that's definitely had a huge impact, as we've seen over the last year or so in the financial market. And then how Access is describing this sort of paradigm shift where more are becoming familiar with the concept of inflation as shown by the information here on Google Trends. This is sort of the early stages, at least in my mind, what sets up for that future paradigm shift, and why it's really important when you look at these crypto assets, the ones that have sustainable growth over those long periods of time, because the money has to land somewhere, and the best stores of value are going to end up reaping the rewards at some point in the future.
Very good. All right, so on this slide, we're going to take a look at Bitcoin on chart 8 against the dollar. And we're going to look at, on the right, the US 10-year chart again. And I think the thing to note here is when the dollar tops, it reverts back to the downside. But that can't happen unless the Fed changes their position. What I want to bring up here is that we're here, but the dollar's still rising and the Fed hasn't changed their position. So what does that mean for Bitcoin? Well, statistically, if the dollar is going up, Bitcoin's either sideways or been coming off a low. So you're basically looking to the Fed to answer your prayers as far as if you don't want this fucking Bitcoin bear market to start. And as we go further, Wales knows this, that it's inevitable at this point. Bear market's fucking full on, man.
Yeah. I mean, it's kind of crazy, right? Because when you sit here and you look at what's happened just over the long term, just looking at that 10-year chart, that 10-year yield chart, what were they doing, right? Why is it that in the past, 4 or 5 months, or just really the past 2 years, interest rates have been vertical,
Insane.
right? This
and
is
don't you think that that's a good thing in a more stable economy, but bad if you just flip a switch?
Well, you gotta understand that in markets there are no absolutes. Everything is relative, right? So that's lesson number one. So while yes, you are right, a rate of return is a positive thing, is it not? I said a rate of return is a positive thing, is it not? Yes. We all are
not if
here.
it is, unless you're down here at an inverted yield, which happens.
Exactly. But this is why context is king. This is why you have to know your economic history. This is why if you do not, you're a pleb, and the market's gonna teach you that you're a pleb.
Scary times to be holding bonds and shit. I mean, it looks good right now, but I think we kind of pointed out earlier that this is just setting up for something worse. The volatility isn't going to get less.
Do you remember when we started streaming last year? What ended up happening? Richard Hart ended up streaming with Harry Dent. That must have been like April.
Oh, I do remember that interview. Mm-hmm.
Yeah, it's April 2021 or something like that. Straight wrong the whole entire time, and you're looking at it on that there chart.
Yeah. Not sure if there's people in here who didn't catch that interview. They made a bet that the S&P was gonna. Harry was saying the S&P was gonna tank.
The bonds. Wasn't it bonds?
I'm sorry. It was the bonds. It was the bond market. Sorry.
Right. No. All good.
And the interesting thing here to note is that, like, why is a guy like that who's a constant? Maybe he's just short in the bond market all the time. Maybe that's what he does.
No, bro. These fucking Wall Street guys, bro. Like, I know I work there and all that, but I don't work in there. So let me tell you what it is. On Wall Street, you can only fail conventionally. You cannot fail unconventionally, because what that means is you went out of your way to lose.
What do you mean by that, though?
You won't lose your job if you lose like everybody else's.
So there's it's just like the same cultural problem that we have here now, is that nobody is willing to put their neck out there and suffer the consequences if they're wrong.
Nope.
So what you get out of that is a zombie economy.
Mediocrity.
Yeah.
Mediocrity is what you get out of that. I mean,
not good.
What has it led to? you have a pervasion of financial privacy on all fronts. And I know because I'm one of the guys that has to be like, nah, I'm just not doing that. I'm one of the people that does KYC. I'm a back office. What does a back office do for Wall Street? It allows them to actually take your money. Because if all their little fake paperwork and all little fake rules ain't in place, then they can't put on their little fake show for you to believe that all the bullshit rules that they make up are worthwhile. But in reality, all their little bullshit rules are literally just an invasion of your Fourth Amendment rights because you don't know any better. And
So
this
I mean, effectively, these guys on Wall Street, their answer to the problem is print more money. Effectively,
hold on.
And-
There's
and-
a reason. There's a reason cryptocurrency exists, and it's because of Wall Street. So for anybody to think that this is to invite them in, you're a moron. Simply
it's
put.
a takeover, right? Is that
Mhm.
kind of your?
It is a fucking takeover. This is not an invitation.
Mhm.
This is not a fucking party. We're partying. Their party is over.
I mean, they're entering at the top of an S curve. So,
Good luck to them.
Wave.
Yeah, these are really good points, and I would highly suggest, across the charts and the really good comments from both Wales and Axis. This is a really honest look at how things work in practice at a global level, and then the result of that, when you have a zombie economy, it creates a lot of the systemic issues that you observe in the world, and then that creates a lot of the issues again. So uh, this is I going into this sort of paradigm shift. It's going to be it's not going to come without a lot of big bumps, and we're just seeing what that's starting to shape out. So I just think it's well said, and I highly suggest everybody seriously think about what's being said, and how you can use that information to better prepare moving forward over the next 5 to 10 years, because this is a long game, and this sort of transition is going to still continue to play out over the remaining of the decade. And then what we're seeing in the market now as a snapshot is it's an early inning, but it's coming with bumps.
All right, so we got here the on this slide here we have Bitcoin versus S&P 500 index, and the key takeaways of this chart are that against Bitcoin against the S&P, by the way, the S&P is propped up by fake money. So Bitcoin's struggling against fake propped up fake asset money stuff. Like that's not a good environment to be buying Bitcoin in even. And here's your 200 moving average. I mean, this is like a potential move that you could see easily. And then on the second chart, it's interesting because I found this on Twitter, and I don't see how anyone could say that the top chart, Bitcoin versus dollar, looks anything like the chart below, the S&P. Like it bounced hard off its ABC correction level and ran because of money printing back in 2009, 2010, versus now where Bitcoin is struggling because it's the weight of not just it's the global economy, the weight of it, and
I like all your
this is not. I don't see where anyone could see a pattern here. Like this is downside risk, you know what I mean? Like but the question becomes how long? I think that's something that we're going to try to detail as we go along. So I threw this. Anyone got anything to add to that?
Yeah.
Go ahead.
Oh, sorry.
No.
Oh, yeah. Yeah, as far as the so for the Bitcoin price chart, just a second ago, yeah, it's is when you're at these really long ranges. So and Wales made a very good point earlier when he specifically spoke about not projecting in terms of absolutes, and that's what makes a real analyst versus one that is relying on the state of their emotions. And the issue is, if you're relying on the state of your emotions, that is what causes a lot of the pain in just about every financial market. It's definitely much more in crypto, with frenzy buyers that get in after big price run ups. So the range that Bitcoin is even in today, and even these charts that Axis has here for Bitcoin, Bitcoin versus XPX, and then these are you don't quite know where that current range can be a representation of accumulation versus distribution on the chart, but there's definitely like a lot of bearish patterns if you look at how things are playing out, at least in the short term. So that's why, as far as like keeping expectations in the market, I think it's very I think it's healthy to consider, you know, longer time horizon because of the potential bumps that can take place on the way. And I'm not going to make an absolute statement in terms of where, you know, I think I can speculate on where, you know, the bottom is, but it's speculation, right? So at the end of the day, we're at this stage of the market, and there's a lot of factors that Bitcoin, the stock market, have for a good part of 2022. And again, it just goes back to the bumps, and then just planning out over a longer timeline, as opposed to making, you know, decisions during those frenzy times. But I'll pass it over to Wales.
I just want to focus on what Axis said earlier, which was a great point, and how Bitcoin is struggling against the S&P. Now, why is that important? Well, because it completely obliterates their whole narrative about Bitcoin being sound money and a safe haven. Because in reality, Bitcoin is correlated to the S&P. It's damn near 1-to-1. You know, rarely is it not positively correlated. And this is something that they don't want you looking at. They don't want you even talking about it. They don't even want you knowing it, but it's true. And that chart highlights it, because how can Bitcoin be dumping now versus the S&P? I mean, isn't that supposed to be the salvation? That's supposed to be the place where you go and you know, that's Noah's Ark, isn't it?
It kind of makes sense when you think about it, because everybody that was buying Bitcoin back here at like 30, 40, 50, 60K was also buying Meta and Netflix and XYZ, and they got their ass whooped on that shit, and now they need money. So look, where are they going to go? They're going to go back to their Bitcoin stack.
Well, what they're going to do is they're going to liquidate their Bitcoin stack first, because they have to cover collateral elsewhere. And where is the quickest, easiest way to exit? Crypto. And that's what you're seeing.
Very good. Let's move on, because I want to get to the Hex stuff, because honestly, all this old shit is just to get you guys up to speed. So here's a quick Hex versus M2 money supply. You come with me here on chart 12 on the left here. This is a chart produced at whalesonly.com. It's exclusive content. It's some of the best charts in Hex, one of the best charts in crypto, to be honest with you. This chart in red is the Hex price, and it'll become more and more. If you're new to this information, you'll see the reason why that red line looks like that, why Hex can do what it does. It's a function of many factors, but it's all backed by math and code. We'll come to that later. I think the key things to note here is that on the right chart, 12B on the right side, you're seeing the increase of dollars in the system over time. Basically, you get much past 05, Katrina, and all that crap that was going on back then, and the money printing just started going, and COVID happened, and we went vertical, bro. Like, we went vertical. And it's going to be funny, because you're going to see why this last Bitcoin bull run was not what it was all cracked up to be. You'll see when you compare this line to the Bitcoin. Now, back to the Hex chart on the left, you can see here that I just wanted to make a point here on this slide, and then we'll come back to it later, is that this inflation, this inflation curve, this yellow inflation curve, it's all the new Hex coins that's getting minted by stakers. Those coins they're not getting produced at a quicker rate. See how over here on the dollar, the amount of dollars gets produced at an increasing rate? That's called hyperinflation once it goes vertical, guys. Versus Hex, which is hyper deflation, because after you get past that deflationary equilibrium in about a year and a half from now, when we're at the top on the market, Hex, the end of the next bull run, and you guys see those fractals there, you're gonna freak out. That stuff is gonna get so hard to acquire. It's already hard and rare to find. Like, it's gonna be even worse. Like, take your blessings that you're here now, because you're getting in on something at the ground floor. That first 2 years, that was just a preamble.
Literally, and that chart really highlights how it even happened, because what you really didn't touch on is the important part in my mind, and that is the gray line, which is a deferred inflation. The deferred inflation is the hex that should have hit the market, but did not, got restaked. So what does that mean? That means that that supply is just non-existent. So
Correct.
it makes hex even harder to get from that perspective.
I'm glad
Right.
you mentioned that because
Mhm.
yeah, I overlooked it for a second because we're going to come back to that later. But
Ah,
why that's so important is that deferred inflation, you know, it ends up making. See, what would it be regularly, guys? If every time your stake ended, you could not restake it and you had to sell for dollars, this is how much would come out of the supply every year in dollar terms, 3.69%. But
what
what we're
was
actually seeing is closer to 1.73. Is that correct?
correct. What's interesting is that people presume it's 3.69 when in fact it has to work its way up to that level annually. And this is why you have the kind of price pumps that you see, because the supply is really non-existent. People are really just not grasping. I mean, we're going to talk about liquidity and stuff later, but it's understanding kind of how, markets work. And it's all supply and demand. If that supply is not out there, then demand is going to affect the price.
So these are the monetary mechanics here that is causing the dollar to be worth nothing and hex to become worth
Something.
almost something crazy.
Mhm.
Brilliant design. Okay, we slide. Bitcoin versus macro. This on chart number 13 on the left in white. The yellow line represents the money supply, the amount of new dollars coming into the system. What do you notice about that versus the previous bull runs in Bitcoin's history? Anybody?
Mm, let me see.
Wave?
Yeah, so just to make sure I'm viewing the correct chart for chart number 13, it's
Chart
you could
13.
you could see it. I don't know if this is the correct term to describe it, but it's like it's almost like a debasement where you have the general trends, and then just insanity happens where there's this huge sort of disconnect now that in my mind is sort of inevitably at some later point in time sets up kind of that hyper inflation scenario at some point in the future. Granted, we have the conditions we have in the market today, but that's a shit ton of money that's been introduced. That is a huge anomaly versus the entire existence of Bitcoin and crypto up until it looks like March of 2020. So you could see it right on the chart. The COVID flash crash that then created
Right here.
that bull cycle up to close to 70K for Bitcoin, and then of course much higher on Ethereum, and then even much higher on Hex. So to me, it's just kind of a time portion. There's kind of the time in question, but it's scary.
So here's what I see in this, and if you hear me out, I see a relatively, and I say relatively because you know that this is the dollar still it's still inflating. But what I say that is this is a relatively stable market over a 8-year period. And and you can see here that Bitcoin bull runs were finding support on a stable money supply. Well, Bitcoin just got rugged. Why isn't it going up? If there's all these extra dollars, there's no support. It's all fluff. It's all fake. It's all manipulated. It's all spoof orders. It's all not on-chain asset trading. It's people don't understand the level of manipulation going on. Bitcoin, let me add that Bitcoin was the Trojan horse that got us in the front door. But we need to sacrifice Bitcoin for the betterment of the regular guy, like just me, you, any of you out there that's looking to get into crypto. Hex is the closest thing we have to the people's coin because it cannot be manipulated in this way. Now, chart on the right, let me just say this and then Wales will let you go. Chart 14 is basically just stating that we already tapped the $20,000 top from 2018. We already tapped it right here back when we came down last year for the start of the bear. And when you measure it against the money supply, so if you take the Bitcoin chart here and you divide it over the amount of dollars in existence, we've already hit 20K in real dollar evaluations versus what you could spend at the store. All right, your turn.
You done, bro?
Yep.
All right, cool. Thank you for the super chat, Jacob. And everybody, thank you for tuning in and all the great commentary. Everybody's really digging what we're laying down so far, which is great. T-shirt rate just got updated again to 21,719 hex per T-shirt. And this is the key to the system that everybody chooses to ignore. And it will be to their detriment because the T-shirt rate doesn't care. Just keeps ticking away. And this is the difference between what you're looking at on the screen and what we actually own. If you own Hex and you're staked and you're being represented by T-shares, right? And in the way that you're allocating your capital. How does that make it so different from what you're seeing on the screen? Because chart 13 really highlights how big of a lie the narrative is. Literally.
Mhm.
Like, to believe anything you are told in regards to Bitcoin and all that nonsense that they sell, because it's all nonsense. To believe that in light of that chart, I mean, you need some help. Need some help.
And it's funny because I made this chart. I pulled this chart from this guy on Twitter maybe 3-4 days ago, and I put it in here, and I didn't realize what it meant until like a day later. And then
Wow.
here I am.
Yeah.
That happens a lot with me. So.
Basically, Bitcoin should be where that yellow line is. And that is exactly what I'm talking about that happens with gold. Now it's already happening in Bitcoin. And this is what I try to explain to people, that this was going to happen. There's no way around it. Literally, no way around it because everybody's inviting them in.
The wolves den.
Mm-hmm.
You got anything to add there, Wave?
Yeah, so this is actually a really interesting conversation. So and this I'm sure this will tie into later on in your presentation, but when even just going back to the whole, like we view chart 13 and we see that decoupling right now with the money supply and then where Bitcoin is today. So you have all this off-chain data. And back to what Wales was saying, when you look at what is the actual truth, off-chain is from my viewpoint, I view off-chain as 100% a scam, because it's the whole reason like why we're sort of in this transition phase where we have trustless options when it comes to cryptocurrency. And then when you look at the the way that Hex was introduced into the market, it was the first pure in the actual market. And this can't, and you can't, the problem, and this isn't to say this is necessarily a complete downfall for Bitcoin. Like I truly believe the price on Bitcoin on longer time frames will keep going up higher, up and to the right, aside from how the remainder of this bear cycle plays out. But the drawback that can't ever be fixed is the sort of toxicity that's created with the combination of centralized exchanges and all this off-chain data that's tied to it that then can greatly skew what the actual truth is and what that picture is. So then when you look at what happens this most recent market cycle with the introduction of decentralized exchanges, Hex was actually what brought the volume into decentralized exchanges, specifically through Uniswap. So now the big difference is, instead of having you have the sort of the impurities of this off-chain data with Bitcoin as like a store of value. And again, I do believe Bitcoin will on a longer time horizon keep going up higher, up and to the right. But now once you have this on-chain data that can't be misled, it changes the game entirely. So I guess with that being said, I'll hand it over to Wales or Axis.
Yeah, it's pretty interesting. This is one of my favorite slides in the whole thing. So let's take a look at Bitcoin dominance. Let's talk about the previous bull cycle and compare it against altcoins. On the top chart 15 top panel, You have Bitcoin dominance. It's just the amount of percentage of the total market cap of all cryptocurrency is denominated in Bitcoin. And on the bottom pane, you have all of the other cryptos in a basket except Ethereum. I left Ethereum out because Ethereum and Bitcoin are correlated by a factor of 0.8, meaning they're basically the same asset. So I just said, fuck it. Let's just show the real data. So you notice here, between 2018 and 2000, the market was in a severe bear market for those 2 years. But while that was happening, Bitcoin continued to gain dominance and relevance. And I remember the narratives. Everyone was like, Bitcoin's all that matters. Everything else is garbage, blah, blah, blah. And it's just the mindsets of these people. They don't even know what's happening to them. They're just parroting what they think. And it's funny because the reality is that people go back when people get scared, when altcoins do this, people get scared. Where do they go? The next safest thing, which at the time was Bitcoin. And that trade made sense then at $3,000 before the money got inflated and everything got even more manipulated from a centralized perspective. And then you get to 2020 when the money printer got turned on and you see Bitcoin lost dominance because the narrative changed because there was so much free excess money flying into the altcoins that from going into Bitcoin first and then flooding the altcoins. I remember the run-ups back here on the coins because I had just suffered 2 years or 3 years of bear market. And I remember thinking XRP or like Chainlink at like $10 or $15 was like, all right, that's got to be the top. That's got to be the top. And no, and everything just kept running and running. And like, I realized then that that the bear market made me forget how good the crypto bull markets really are. So it's easy to get on one side of the fence, bearish or bullish, and get stuck there. So in a lot of the future slides that you're going to see in this, we're going to try and play devil's advocate on both positions. One key thing, that last thing on this chart 15, take note of was once Bitcoin's dominance broke this level here to the downside and broke through, it has found that as resistance for over a year. And that's kind of when we've been ranging between 30,000 and 60,000. And you can see it's starting to get horny again. And people are starting to be like, oh, I'm a fucking Bitcoin maxi, fuck shit coins and all this and that. It's because they've suffered so much. They're ready to convert into Bitcoin, and Bitcoin's going to break this and go higher as far as dominance, but people continue to ditch altcoins throughout the bear market. And I want to give a special shout out to the Crypto Sniper because he did a video on this the other day and I really like his content. So thanks to him for that. He said today in a tweet, stablecoin defensive positioning validated as Bitcoin trades through the 36K level. Shorts on Maker and XCZ. Yeah, they probably got wrecked. Dollar dominance in failing debt game is the call for now. So people are scared and they're leaving everything that's a risk asset and they're putting money into dollars. Hence the DXY, the dollar index chart, going up on the 6 month to 20-year highs. You guys can pick up the tab.
Oh, yeah.
Anything to add to that?
The Bitcoin dominance one. So this is actually very good. Another very good point you're making. Just in general, this is a very good chart. So, because what Alex is suggesting as far as the Bitcoin dominance, if you look at what's happened for the last 3 to 4 months in the altcoin index, this is a couple of months ago when we were talking about altcoins specifically, where it was very high risk in that total 3 index. And we see that total 3 as an average underperforms even something like Ethereum. So the risk when you go through these big bumps in the cycle is that what you see, or is like when you're speculating on like different altcoins, the reality is that a lot of those coins aren't going to be here in 5 years, and that value can end up getting stuck up by better assets in the market. And as that's mentioned,
Your mic's cutting out, bro.
Bitcoin,
Your mic's cutting out.
Is it? Okay, my bad.
It's like, it's definitely connection. It's definitely like it feels like your connection's buffering. It's like, it's like,
yeah, it's crackling.
Gotcha. Is it right?
Nah, it's still kind of doing it.
Okay.
Give it a second, Wales, and then you come back.
Yeah. So I think what's interesting is that over time, Bitcoin dominance should actually be reduced, right?
Correct, because you can print an infinite number of cryptos to value it against.
Correct. I think people just don't get that. So if you don't really, like Bitcoin dominance should always be going down. Period. That's just like when you have a Satoshi or a Musk or a Bezos character, right, or a so-called Zuckerberg or whatever. You're gonna have the entity that owns the most of one pie at the beginning, and then over time it should be reduced. So same narrative here. That's all I got on that.
Wave.
Sure.
You
How's
muted,
the
bro?
mic audio now?
Just go for a bit, and I'll cut you off if something's bad.
Gotcha. Cool. Yeah. So for Bitcoin dominance, so you made Wales made a very good point where you have infinite number of altcoins in the market that reduce the ratio, the dominance over time. So when you look at what's taking place now in the market, I truly, just based off what because I've been through a bear cycle before.
Yeah, the
and
audio's still choppy, bro.
Is it? Okay.
Yeah.
Damn it.
Maybe unplug it and plug it back in.
That's fine. There's something's hogging your bandwidth, I think, in the background, maybe, or something.
Yeah.
Or that. Because you were good up until like a minute ago.
Yeah.
Yeah. That's
tell the girlfriend to get off Netflix, bro. Jesus. God. All right. Let's move on. Okay. You guys, Richard Hart has been saying for a year that we fell out of the top of an S curve. Look, it's a freaking 12-year S curve. This tool here is a curve tool that it's designed to do this, and I just found the touch points, and dude, it's amazing. It's basically saying that this is going to be, a multi-year, like this is basically potentially going to set up for eventually huge returns, but this could be drawn out for a long time. It just might not look as severe because the downside might not be as bad. But, Wall Street can accumulate a lot of coins down between 20 and 30K for 2 years. You know what I'm saying? So there is value there for them, just not for the guys that bought higher. Basically, the point of this slide is to prove to you guys that the way to look at this is it's institutions' turn to figure out what to do with this fucking Bitcoin. It's a piece of shit, but there are people in third world countries that get a hold of a Bitcoin miner and their life is better for it. They survive because it has real world utility for them, because it's worth so many dollars and so little of their native currency. There are those guys out there. Bitcoin's saving lives every day, but you're over here on this side of the fence. It ain't the play. It ain't the play. We know what the play is. Not on this chart. Any comments?
Yeah, I'll add to that because that's a good point. But I think to piggyback off what you said, it's important to realize that technology develops itself in waves, right? Back in the day, we used to call TV the tube, and that's because the projection came through a freaking tube, right? And what you were looking at was a parabolic image being shown to you through a tube, like a straw, being like a spitball, right? Pointing at you. And that's what the image on the TV in front of your screen was. But guess what? Now in 2022, it's no longer a tube. It's a flat panoramic screen in front of your face. Now, what's happened? Well, people are missing that the same thing is happening elsewhere in technology. I mean, you started out with what? You started out with Walkmans. Now you're walking around with just your phone. You started out with a calculator. Now you're just walking around with just your phone. You started out with a phone book. Now you're walking around with just your phone. Like, how do I need to continue? You had Bitcoin. You had Microsoft Windows in 95 too. Like,
I think the one good thing that ever came out of Michael Saylor's mouth was that the digital world is eating and vaporizing physical products away.
yep,
I'm paraphrasing.
that's the only smart thing he's ever said. You're correct. I remember him saying that because he's accurate. Because that's accurate. It's true. You see it everywhere. And let me tell you something. It's not like it's not obvious, right? It's just the way that he worded it. It's just a nice way of wording it. And it's important that we realize that, right? Because this is how we make the good investment. This is how we make life-changing wealth. It's not by playing to the tune that they want you to play, right? Because what they want you to do is work. What they want you to do is use the dollar. What they want you to do is being in a losing position at all times. And we're trying to educate you to operate from a position of strength and never weakness. And that comes from being consistently educated properly. And that's what we do over here. So when you're looking at this S curve, what's happening? Well, that's saturation of the market, right? This is the top, so to speak, of the value add proposition of an asset class that has been around for 12 years and now costs 5 figures. Because
that's so true, bro.
Yeah, because what happened? Well, it's been 12 years. It's now 5 figures. And guess what? In order to lift it up 1%, it requires a whole lot more economic energy than it used to. Because now everybody's in that swimming pool. So if you think about it, what's happening? You're making the slices of the pie smaller, right?
Yeah. How's
makes your return profile a little skimpier at the same time, basically.
There's just nothing to be had up there for your regular 9 to 5.
Yeah, pretty much the point.
But Hex offers so much more for you guys.
I mean, look, once we're able to talk about Hex, I think it's good to describe the whole market, the scene, and then contrast everything with Hex and its positives, right? Because it's hard to talk about this negative stuff and try to interject Hex in every nexus of it, kind of, I think.
Maybe.
Right? Because, I mean, S curve. Well, Hex is just starting this S curve. Hex dominance. Yeah. Well, I mean, Hex is brand new.
We'll look at it later, but I think Hex is like somewhere. We'll look at it later. I think Hex is somewhere in here.
Yeah, I agree.
It's below there, I would say.
Okay. Can't wait to get to that slide. You guys ready to move on?
Yeah.
We're an hour in, everybody. We're getting close to the Hex stuff. We just got a couple more slides on legacy. Chart 17 on the left, top panel. See the Bitcoin futures open interest. This means people with open positions are underwater, effectively. And Wales knows, honestly, he knows a lot more about this particular slide than I do. But things that I want to say about it are, here down low, you can see that the GBTC, Grayscale Bitcoin Trust Premium, is like, I think it was like 25% off or something, meaning if you can buy Bitcoin for 25% off, the spot price is going to be drawn to that level because it has to. It's just simple economics, or lower, to get that premium fixed. And then on the right, chart 18, top right, we had a bearish, quote unquote bearish thing happen the other day. If you see this white arrow is pointing in the bottom right corner of this graph, that's the amount of Bitcoins that got deposited onto centralized exchanges. You could assume that people are looking to dump. And then on this Bitcoin volatility index, you can see that we've been getting squeezed down tighter and tighter into a volatility squeeze. There's a big moves coming. Anytime that you get these volatility squeezes before, look, and that was the bull run. Here you got another volatility squeeze, but this one was a fucking shoot down right here. Shot way down. It went down 3K from 10K. The question is, what's going to happen? Well, we're going to lay out the facts to show you that downside is more probable. Down here, you can just see that the Grayscale Investment Trust is all of its holdings are down like 25 to 40, 50%. ETH Classic's down 60%. Crazy.
Yeah, I think it's kind of funny that people don't try to learn the distinction between, the actual market, which is Bitcoin on the chain, the CME futures, and then the trust and the implications that they each have on the market, right? Because what's happening right now? Well, if you've been paying a little bit of attention, you'll probably notice that Grayscale is going pretty fucking hard to try to get this ETF thing passed. Now, why is that? Aren't they supposed to be the guys that are trying to enhance the price action of Bitcoin, not suppress it? Well, seems to me that you have open interest in Bitcoin, which open interest, as Axis highlighted earlier, is just merely detailing whether an entity has an open or closed position. It doesn't matter whether it's long or short. It just matters that it's open. So what that means is by looking at the chart, you can kind of presume how the market is positioned, assuming you were following along prior to that point in time, right? Because here's the thing, they don't hide anything. And you guys have seen me show you that time and time again, how they're just out here doing what they want. Because ignorance is bliss. And that's how you have a minus 25% GBTC premium or discount, excuse me. And people think the bottom is in for Bitcoin. I mean, you can't make this stuff up.
What do you think, Wave? How's the mic
Yeah,
working?
I'm gonna rejoin because
Your voice is good now.
Oh, is it good now?
Yeah,
oh, cool. All right.
fun.
Yeah, it's like the connection. I looked at
I'm
it.
telling you, if you just like be quiet for a little bit, like your bandwidth will like restabilize. It seems like it's packet loss or jitter is what it's actually called. Like there's something like you got a weird you got a rough signal on the line.
Yeah, it could be. Yeah, I was just gonna add to the I guess to the I guess with where Bitcoin's at right now, and even back to the whole the whole dilemma with the ETFs, because the premiums, was it minus 30% for it's around minus 30% for Bitcoin and ETH. So and with what's taking place with the SEC, where things just keep getting sort of the can just keeps getting kicked down the road, so to say. So the next sort of approval, the next status occurs in July regarding the Grayscale ETFs, and if that ends up getting if that's a no-go, it just keeps pushing it further and further out. So I'll personally be surprised if anything happens with ETFs, at least going into the summer months. But again, this just, to me, all of this just kind of goes back to the whole issues where all this stuff, and then the collusion that's taking place on the legacy side, and then Bitcoin falling out of the S curve, and sort of the richest person or the richest man in the world bot. There's all these factors that are up against Bitcoin right now, and it's hard with the fact that this kind of data is all isolated in pieces off chain. So I'll rotate back to you, Axis.
Yeah, I love that. So we'll move on from this slide. We got about 3 or 4. Actually, I think there's like 5 Bitcoin analytics slides. I just want to impress upon you guys that the bear market is in full swing, and it's the funny thing was that it cracked today. Of course, the day I come back to streaming after 10 months, which is godly timing. But so if you look here on the left on chart 20, you have a 2-year moving average multiplier band on the base on the green line, and then you have a 5x increase above, which usually highlights blown off moves in the past. Now, if you speed up to current times, what you'll find is that at the top we neither breached it at the top or had breached it to the bottom. The question becomes, why didn't we crack it to the top? And also, what's taking it so long to crack here? Well, this is not that much different of a chart pattern as it was back here before we saw the capitulation canyon of 2018. So, I mean, you could assume that would be one scenario that could play out. Go down to $20,000 roughly for Bitcoin. But the thing we're not factoring in here is that if you look at the amount of bids to asks across all major exchanges right now, we're talking about a 2-to-1 bid to ask ratio. And it's going to become clear later on that the bearish price action is in part due to long-term Bitcoin holders controlling the price to the downside. On the right side chart, 20B, this is an example on the bottom pane, the right chart. This Gaussian channel acts as support and resistance at different times in the cycle. When you have certain breaks through these levels, it spells multi-year problems. This chart is from 2014 to 2022 on the bottom pane. And the top pane is current time. So if you notice, Bitcoin was able to get above it, but it just fell back through like butter. And the last time, back in 2014, a similar thing happened. Tried to bounce here, but fell, and it just tried to get out, and it got farther this time, and even got above here. But like I'm seeing one of two things happening here on Bitcoin price. I'm seeing 30K and a bounce out, or like 25K and a bounce out, and the big dogs kind of like move us higher on these longer term yellow trends that scoot back a few years. Or we're in for, like on the S curve chart, we're in for that like long, like 3-4 year accumulation, like institutional accumulation, retail to institution handoff situation. I would call it the soft bear market, is what I've been terming it. The soft bear market, because it's like, like a lot of people made money on Bitcoin when it was ranged between 30K and 60K, and it went up and down twice. I mean, there's a lot of to be traded for up there. And now, as we'll come to find later on in the realized hodl ratio, we're running out of people who could have even realized profit at these levels, as far as people bought within the last year. Anybody else got anything to add?
Well, it's interesting that so many people are just underwater in Bitcoin, and you see so much cheerleading out here for it. Kind of confusing.
Yeah, and the institutional buying part is important too, because if you look at just crypto in general is one of the last places, if not the last place, somebody can have opportunity entering the market. So with the institutional buying that inevitably takes place, it's pushing retail out of assets such as Bitcoin and ETH as sort of the conduits, and it goes back to this, understanding this in advance so that you can prepare, moving forward. So, because at the end, if you look at what's taking place just globally with wealth inequality, again, this market is one of the last places where you get these kinds of opportunities, and institutional buyers want to push retail out as much as possible. But with that being said, with the chart axis has that chart 20.b, the very top one, considering a scenario for Bitcoin, and even the one below it where it's showing the bear market going into 2014. When you look at these various charts and what's taking place with Bitcoin dominance today, and again, since the supply of altcoins on the market is infinite, a lot of the coins in the top 100, I just don't think are going to be here, going into the next cycle, and the value then just getting sucked into the better assets in the market, and the ones that have, even the price data that justifies making bigger positions in that. So that's why, a while back, a couple of months ago, really going into January, when we were talking about just being very careful when you're looking at altcoins in the market. I saw a lot of people pump chasing, selling their hex, chasing shit coins.
I saw
on
that
Twitter.
Too.
So yeah. So ultimately, just statistically, the people that resort to those types of behaviors are they are the retail in a way that gets pushed out permanently. So just put it in perspective.
Alrighty, moving on. Oh, just one last comment. The comment at the top of the screen. This is basically saying that the Wild West of crypto is dying for crypto. Like, you're not getting those outsized returns that you were a long time ago. Let's see some more market analytics. On the left, chart 21, we have the Bitcoin Fear and Greed Index. Institutions are preying on your emotions, trying to get cheaper and cheaper Bitcoin, because at the end of the road, there is consistently less and less Bitcoin supply available for sale at any price. So why not make some people shit their pants and drop their load all over the freaking street, and they can just pick it up for pennies? Makes sense to me. It's interesting to note here that in 2020, during the China scam pump and dump ban thing that happened, we started a new trend, and it was only obliterated by that anomaly event of COVID-19. So the question is, will they get a global disaster piece that can get us, a wick down here on fear and greed? That's only 20K. But if you get the same outsized scare that you got here, I mean, that thing could come all the way down to 10K. So it's just good to know that the play that's trying to be made here, it's in an uptrend if it falls into this wedge. But as far as sentiment, but it's going to take a long time to recover people's trust in the product. And the product meaning anything that's not Hex and Pulse Chain, PulseX. Like, I think that kind of little economy knows what's going on more than maybe like the retail people that came into crypto for the first time here at 20K. So it's easier for institutions to basically take the handoff at super low prices if they can just play on your emotions. And on the right here, we just have today's price actions showing correlation amongst them. Like traders got into Hex the last few days and they dumped their bags, and now those guys are out and the price is sitting stable above 18 cents. They fucked up. Hex is not correlated right now, but it did for 6 hours today while there was that mega sell off on the majors, because there was a few traders that are thinking that these are the answer, and they don't realize what they hold. Anyone else? Want to just go on to the next one? Let's just get through these Bitcoin charts.
Yeah, get to the Bitcoin charts because they like whatever.
Dude. Yeah. All right, guys. Hex is coming up. I just wanted, this is just also points out that we're under the orange 111 DM daily moving average, and that when it finds resistance on that, it usually pisses its pants. So that's kind of where we're at right now. We just went under it, getting rejected off it. Logarithmic growth band. Now, if there is downside, it's close to the bottom of the downside based on this little red oscillator down here. But for how long? That's what we don't know. You want to be holding Bitcoin? Do you want to buy Bitcoin at 22K and then hold it for 3 years to watch it go to 60K again, or even 100K? Or do you want to buy Hex right now and watch your bag like 30x over the next like 18 months? Even though Bitcoin has these insane returns against the other sectors of industry, Hex is outperforming it. Here you see long-term trend of there is accumulation happening on Bitcoin. The yellow line here represents the people that hold Bitcoin for more than 1 year, and that's all on-chain data. So it doesn't include maybe some stuff that you can't predict that's off-chain data, or a passing of a wallet from one person to the next without any transaction happening on chain. But it's a relative indicator that shows you that we're making a higher lows on that, and that accumulation is happening, meaning long-term Bitcoin will eventually reach $100,000. Here is I've mentioned this earlier, the R HODL ratio. This is the realized gains so basically what this is saying is that there's just nothing left for people to, like, if they sell their Bitcoin right now, they can't get any returns on it because they bought too high. There's not that much downside left for them. There's just nothing left for them there. Bitcoin it's fizzling for a while. And then chart 26, this is the last Bitcoin chart. I highlighted here just these orange spikes. All that is just people that held Bitcoin for 10 plus years that are moving those coins onto the exchanges and selling them. You see back here on the run up from we got out of that bear market, there was a lot of that going on where those long-term guys were selling, but they were selling into strength and money printing. Well, now they came back and they have a motive and they're dumping. Be careful. All right. Finally, Hex versus Bitcoin. Hex is doing the same thing as Bitcoin, but faster. posted this on my Twitter a little while ago, and everyone kind of liked this idea. The basic idea is that Hex is repeating Bitcoin's fractal. But we've already found our bottom. There's nothing to go here, nowhere to go here but up. And we'll see that as we go into these next few charts. Chart 28, this chart represents how much percentage of all cryptocurrency is dominated by Hex's market cap. And you can see here that there's a clear pattern, same angle of pattern too, same trend playing out here where it just continually makes higher lows and then just resets, higher lows, resets. It's hungry for that dollar price point, but Hex is hungry for the complete takeover of savings. It's a mission, and this chart is showing you that only increasing the amount of time this bull run took by 25%, you were able to see these insane returns. So the theory here is that on this next cycle, that if you increase the cycle by 25%, that has us at a peak somewhere around 260 days from now. So less than a year, based on these. And this could just be this could be a local top. It doesn't necessarily have to say it's the top of the bull run, but just that when that's kind of where we want to go as far as like short term, because this is just till the end of 2023, or I'm sorry, the end of 2022 into the beginning of 2023. So this would be, if we do hit this red dotted line up here, that means that X went from being worth 1%, 1.5% of all cryptocurrency to being worth 10% of all cryptocurrency. And I think this is where virality really sinks for people. Does anyone got anything to say about that? Anybody muted?
I'm not muted anymore. I was. My bad. But yeah, I think with the impending bear market, that's pretty much going to engulf pretty much all capital markets because they're all the same. This chart makes 100% sense, right? Because what should happen? Well, capital typically flows where it's treated best. So,
Bang.
Double-digit yields and up is a good way to start.
Yeah, I mean, and if you're new to Hex or if you're new to these ideas, we're going to go into detail about where the returns are coming from. It's not fake. It's real. It's programmed. You think, Wave?
Yeah, and just to add on this hex dominant chart, although what I'm about to say is not the same chart, there's still a lot of similarities. During the last really big move on Hex up to 50 cents, there was at one point where Hex hit 80% of Ethereum's market cap. And what's really, really, really bullish today is if you look at just the overall chart, you're getting consolidation in its current range, which then feeds into what Axis is showing here with the Hex market dominance. Because as Hex increases in ratio versus Ethereum, the market dominance is also increasing. So not that I'm going to project an absolute, but hypothetically, if we enter this scenario where Ethereum drops and Hex is rising, it's very plausible that you may see the first major flip in the market. So just some food for thought, and then I'll pass it over to Axis.
Alrighty. Upside for market cap, upside for price, and here's why. Look at Hex dominating the two major cryptocurrencies. I thought Bitcoin had the best returns out of all I thought it was the safest thing, most returns, bestest asset ever, only thing that matters. And I thought Ethereum was the world computer, and I thought it doesn't matter what you think. Your feelings don't matter here. This is programmed money that people find real value and lock it up and then pump the price to make all their returns compounded. It's get on our team or suffer the consequences, basically. Look at this chart 29 on the left. This is showing you highlighted on the yellow squares these massive pumps that take anywhere from 3 to 21 days. It's always a function of 3 over and over and over. 3, 6, 9, 12. I mean, it's crazy to me that that Hex can run 250% on average when it's ready. When people's like, all right, you know, the market operator's like, all right, it's time to move this thing up. And then on the right, it's I love this chart. It's interesting. It's the Hex versus ETH pair. So again, the left chart's Hex versus Bitcoin. So it's not against dollars, it's against Bitcoin. And the chart on the right, chart 30, is against Hex versus ETH, meaning how does it stack up against ETH price? If Hex price goes up, does ETH price go up too, or does it go down? Well, it's showing you that over a long-term trend, Hex is kicking the shit out of both of them because it got to start at 0 and has way more product market fit and way more functionality than all these other things and produces real yield, and it comes from code, not from thin air. Now, the triple tap theory. I mean, look, we just came down. I drew this chart before we broke out back here. We were just poking our head out. And this projection, these green candles here, you know, we're not go straight up. Point is, that's where we're headed. It's a 350% move from here to the new high. You know, we're already well on our way there. You know, Hex looks great. I love it. My favorite asset. And it's kicking the shit out of your favorite majors. So moving on. Okay. I need you guys to sit down now and pay attention because this chart is probably the most compelling reason for you to stake your Hex, or comfort in knowing that the chart will continue to go up. If you take your attention to chart 31, you go to the top pie graph. This graph is representing the amount of Ethereum in green, Bitcoin in yellow, and Hex in the light green, the returns of them over 1 month paid in dollars. If 30% of Ethereum mined is sold and 30% of Bitcoin mined is sold. Look at how small the dollar amount is getting. So Hex is inflating at 3.69%, but it doesn't account in dollar terms. It doesn't account for the same type of sell pressure that you're getting from like a Bitcoin or an Ethereum. And the interesting thing about that is, if you go down to the bottom pie chart and you look at the real inflation that actually hits the market and is sold or possibly sold in Hex, it's only 0.7% when compared to Bitcoin or Ethereum's massive amount of inflation coming off as negative externalities on the prices, on their price charts. Hex is protected by the share rate. It's protected by long-term holders. Down here on the bottom, you just get the data. So you get to see like Bitcoin blocks mined daily, 144. How many coins per block? What's the price that day? How many days in a month? What's the real inflation rate? And then I took that at 30%. Did the same thing for Hex at its 2.17% inflation rate. Because remember, as Will said earlier, there's a percentage of that that's deferred. Only like 1.73% actually can hit the market, and it doesn't necessarily always. So this is a rough estimate, but if you see this little tiny sliver here, it's a tiny little sliver, 0.7%. The amount of dollars hitting the price chart on Hex is just not, the negative externalities on Hex are just non-existent. The value proposition of Hex is so good that you can have $25 million coming to the market and we can get a huge price move. You know, this is why these things are possible. Because look at on this chart on the right, chart 32, bottom panel, expiring stakes. This is how in Hex we measure people's time locks or CDs. You can see everybody's CDs. They're all here all the way out to 2025. You can stake this stuff out for 15 years and get returns on it at an increasing rate the farther out you go. And when you try to model this stuff out, like what the market, you know, because like Hex is a new pure market that's growing. It's a baby right now, but the market is going to grow way outsized. Growth is going to be so outsized compared to the amount of inflation coming off in like 5-10 years, because the market will have grown so big and so many new users and new people looking for that yield in a world starved for yield, that they'll be able to bid the price back up because they see value in it, even if squids, dolphins of this time are selling at that point. And that's a big if, because there's a lot of new crypto tech that will come out in the next decade or two that allows you to not have to sell into dollars ever again, which leads me to my next point, which is that at some point, either us or our kids are going to, in their mind, not value things in dollars. They'll go to the store and they'll think, how much hex is that? Or how much ETH is that? Because there makes no sense for them to value things in a thing that's hyperinflating. And it's a reality shock for a lot of people, because we were born into a society that there was only, and if you came from America, I know we're not all from America, but if you come from America, we just thought, oh, the dollar is the only thing that there is, and there was nothing else to look at, What do you guys think?
Yeah, the future of money, I personally agree with a lot, as far as how things are kind of denominated in the future, because eventually the dollars, it's just going to become so worthless one day that its fate is already sealed. It's going to be worthless, at some point in the future. So looking at these assets that are algorithmically controlled, so that you don't have these sort of rule sets, and this goes back to the whole concept with off chain, right? So because everything is off chain in legacy, there's no truth to it, and you have a couple guys deciding to change the rules of the game when they feel it's necessary, at the expense of a lot of people globally. So it goes back to the whole concept of money, and why, if you look at cryptocurrencies, just it being algorithmically controlled, and having having this monetary attachment to it, it's just a superior form of money. So yeah, I agree with what you stated there, Axis. And then just even looking at the inflation that's coming in is another powerful metric that you brought up. So really cool to hear that. So I'll rotate it back to you.
Wills?
A couple things. Want to start off by stating that I think it's important that people understand where inflation comes from. And inflation simply comes from not understanding where inflation comes from. Actually, think about it. Why are we experiencing these bouts of inflation now? Because we did not understand, right? Because it's like you said, we were born into this. We didn't understand the implications of what we were being told until people like us sat here and broke it down and tried to understand exactly what was what. There was no knowledge of it to share. We all had to operate based off of the information that we were given from the centralized authorities, aka the technocrats. That's all you could do, right? So what's happening now is that, as a function of all of that, you have this thing that's been created called cryptocurrency. Now, what is cryptocurrency? In its very most basic form, it is simply just software. And if the software is made correctly, like it is with Hex, it just sets it apart from everything else. Because that is the key. You're talking about consistent monetary policy relative to inconsistent monetary policy, where two guys decide to change it because they feel like it, at the expense of everyone else. See, this is why Hex is superior. You don't have to worry about that with Hex, because Hex's code is immutable. It's designed to pay you a yield in an immutable fashion, such that you don't even have to think about it. I mean, I don't even check ever, like only when I'm doing the charts. It's the only time I check. There's really no reason for me to check otherwise.
Yo, I got to
because
address Limon Ortega. Like, dude, like what you're missing. All right, Limon Ortega says BTC and ETH have a serious moat. I wouldn't underestimate this. They didn't do a 100x in
Man,
6
look,
months. It's
all
like, bro,
right,
like,
hold on. Before you address him, you must know he's a pleb and he no longer goes on my streams because he knows he's a pleb. So you waste your time if you want. But
all right, bro. Well, clearly you've been axed. So this guy, dude, you're missing the point, bro. Like, yeah, we can hold Bitcoin to $1 million, but why would you do that to yourself when you know that Hex is going to go up a lot more? I don't understand. It's got a better monetary policy. Got everything better.
It's a consistent monetary policy. Bitcoin doesn't
Fixed
even have one.
inflation schedule. Deferred inflation. This chart is literally showing you that the mint button is not getting used on Hex. This little sliver here, bro, use your fucking eyes. Like, it's saying that 0.7% of the three majors of the dollar inflation coming off per month, it's only 0.7% versus Bitcoin and ETH combined. They're like 96, they're 99% of the dollars. You're just missing the point. You're missing the point completely.
So let's talk about this so-called moat, right? Because again, what is cryptocurrency? What is it? It's software, bro. So if you can't grasp the fact that you're out here promoting 1995 gateway computers, yeah, you're a pleb. Pretty simple.
Look, things evolve, bro. And if you want to think there's safety in Bitcoin and hold that for a decade or two, be my guest. I'm not anti-ETH either. I think there's a lot of value in ETH. I think it's good to have Hex on both chains. I think there's a lot of value in having a redundant chain. You have Hex that's not centralized economically as much, and one that is, and one's backed by proof of work and one's backed by proof of stake. It just adds to the strength of the combination of the two.
I mean, no, let's keep riding horses. It's okay. We'll get there one day. It's fine.
You guys good on this slide?
Yeah, we can keep moving.
All right. Okay, so speaking about like what's been going on recently on the liquidity. So this is Hex liquidity, chart 33. What this chart is showing you is Hex versus USDC. There's two pairs that does that. One has a fee for 0.3% to make a trade, and one has a fee for 1% to make a trade. We just clicked on the 0.3% because that's where like a lot of the trades happen for Hex. It's all on chain. And I wanted to point out that this is 1 year ago. This little purple box here, April I think or May, somewhere here, a year ago. Funny because it's the same time here. You saw this volume anomaly where the volume went to almost nothing. Everything got real quiet. Just happened again. And what happens when things get real quiet? They got to get loud again, and it's not going to get loud to the downside, guys. Hello, the liquidity set up to pump the price, guys. Moving on, Hex liquidity. Look at this, Liam. Look at this bid to ask ratio. You think where's the bid? It's at 60%, bro. 60% bid to ask. Good luck dumping into that. You're gonna get a lot of wicks. You're gonna lose your position, lose all your Hex. This might flip back the other way at $13, bro. Like, hello, use your fucking brain.
I think it's
Next.
funny. I think it's funny that when you look at the chain, what do you see every time somebody tries to swap Hex for something else just to come back to Hex? You see a smaller Hex bounce every single time. Not a bigger one. Very rarely is it a bigger one. What you constantly see is a lower bounce. Now, why is that? Well, that's because people don't understand market structure. They don't understand the underpinnings of what they're seeing on a chart. They just think, oh, chart here, sell. Oh, chart here, buy. Nah.
They ain't even looking at the chart, bro. They just see how many pennies. Oh, that went up 10 pennies. Sell, sell, sell. That's the extent.
You're right.
The amount of intellectual dishonesty and laziness in people just blows my mind.
Yeah, well,
Nobody's willing to look at this stuff this deeply. That's why we're doing this. Is that you guys got a cheat code now. You have all the information. You'll always be able to come reference this stream forever.
Or stay broke.
Or ignore it.
Mm-hmm.
So I just wanted to say one more thing before I let Wave talk, is that there's only 140 million Hex in the liquidity pool. It would not take about $30 million to get us much higher on the price chart. And believe me, there's people sitting with 30 million ready to move up. They are. And we'll come to that later on. You think, Wave?
Yeah, so for the this stuff is really, I like this this data here. So yeah, I just look at, you know, how much energy is really needed to lift the prices up, and the fact that you can view this on chain, that to me is what creates that huge opportunity to like analyze this on-chain data. So I think a lot of people just underestimate what's actually possible, because this is the first time we're seeing it on an asset like Hex. So it's creating that sort of relative reference. But the thing is, like, the original one is the one that, again, gets the rewards in my opinion. So that's just how I look at it. It's, as we've seen with the price action recently, there's everything that's getting sold off now just keeps getting bought back up. And the overall chart structure, if you guys look at the TA even on a monthly time frame, to me it looks good. I'm not going to make an absolute when it's going to start to break out, because I don't know when the price chart's going to start to break out. That's speculation, right? But if you look at it just on higher time frames and see what's taking place on the monthly, and as Axis showed previously, a lot of things are reset, and then now Axis is describing how this works in terms of liquidity and why the prices can go a lot higher. This just gives you more and more inputs to think about. And again, this is the first time we have this in history. And that's why Hex is the first pure in the market, because it's the first one to achieve this level of on-chain data that isn't taken away by all these impurities in the off-chain world that, unfortunately, even though Bitcoin over time will keep going up in value, it's coupled to a lot of those impurities, and you just don't have access to the same data.
What do you think, Wales?
Well,
This
what's
video is
interesting
sponsored
is
by
that
Technology.
we keep talking about
So
on-chain and off-chain.
I need an offer.
You know, I really need people to really wrap their head around the following. If there's anything happening off-chain, it is not crypto. Period. Okay? That's a fake stock market that is trying to be replicated in that instance. That is not a cryptocurrency transaction. End of
I've
discussion.
worked from home and
This is
actually
why
worked
you
from home
have
too.
crap
The
like
place where I used to edit my
Celsius getting
videos is where she
smoked.
works now. A little over a year ago, I built myself a temporary editing
Okay,
booth.
and I
Oh,
talked
feel
about
bad for
this.
them.
But that's
Dude, look at
I don't.
My
You
booth
know
is
why?
way too
Because I
small for the
talked
amount of time
about
I
it.
spend in there, and the truth
Well,
is,
I'm
Yeah.
talking about the guy that first exposure to crypto is he bought Celsius at $5 right at the end. He didn't know what he was doing. I feel bad for those guys.
I don't. Because you know why? That's exactly what people want to happen in this space. And that's what people have to come to terms with. Because until we all do, and by we, I mean people that want cryptocurrency to succeed, nothing is going to change, because it's on us for that not to happen. Yeah. It's your fault if you're out here saying that crap that's a circus is a crypto. That bullshit is not a crypto. And that's why the SEC said no yield for you, bitches, or no interest for you, because they can do that. And that's why your ass is no longer getting any. Do the math, or maybe just read, because it's there. It's not like I'm making it up. I've been telling motherfuckers this shit for a year. So clearly not making it up. But, and this again alludes to the simplicity in this game and why it eludes so many. They try to make it harder than it is. I mean, this goes exactly back to the point of understanding liquidity. This is why you get smoked with wicks, right? I mean, off chain, you don't see anything. You're just going to get whatever they decide to give you after the transaction is done and over with. True story. So keep playing with that off chain stuff if you want. You're going to get burnt. Anything that's trading through oracles, not cryptocurrency. I don't care who says what. That's a fact. You want to know why? Because on Wall Street, people pay billions of dollars annually to be as close to the source of the tick by tick data as possible. So I don't care who you are. I don't care where you're fucking from. Guess what? Oracles are not cryptocurrency.
All right, if you're listening to this stream right now, I'd like everyone to just hit the like and subscribe, and if you haven't already, and also if you got $10 million burning a hole in your pocket and you want to see how to make your entrance into the Hex ecosystem, free fork, go to lookintohex.com and you can run. There's a calculator on there that'll run the equation. If you put in X amount of dollars, it'll tell you how much Hex you're gonna get back and how much you're gonna push the price against you. Because of the low liquidity, there is some slippage. So just something to note. Look into hex.com, click under charts, and then go to the liquidity page.
We got so many good resources. It's crazy.
All right. You guys ready to move on?
Yeah.
Yes, sir.
All right. Okay, so we get one more page on hex liquidity. Now, it's important to, again, pay close attention to these three charts here. If you don't understand hex liquidity or understand automated market makers at all, this is something that Richard Hart talks about a lot. It's something that Johnny Chaos talks about. Set your limit orders, and here's why: is because if you look at these and understand what they're telling you the story. There's a story here. So if you go to chart 35 on the left and chart 36, these are buckets or pools of Hex and USDC traded against each other. So if you trade X amount of Hex down, like you want to trade Hex for USDC, this is going to move, the red line is going to move it from the price point it's at to the right. Because to the left would mean you're acquiring more Hex, to the right would mean you're acquiring more USDC, and effectively it pushes the price in either direction. Now, I just want to talk about what these are actually saying to us. Like, you have a massive bid wall here that's making sure that we're protected. There's tons of bid support here, but in my eyes, we're past this spike here. Like, we're not going past it. We're not going, like, this is holding support right now at the 0.382 fib level on this last fib retracement, right now at 18.325 cents. And we're moving higher. We're ready to break through these resistance here that was from back in January when there was that $20 million bid wall put up and we fell through it. We're about to reclaim that area. And if that holds a support, watch out, because that means that we're down here in low liquidity territory and the price can slip hard. Again, if you have 10, 20 million burning a hole in your pocket, buy here before and only get slipped like 2 or 3% instead of here where you get slipped like 7%, right? Same thing applies to the middle chart 36 here. Again, X versus USDC, smaller fee pool. Couple things I want to note here on this chart, and if you're a Hex whale, I'm sorry that I'm going to blow smoke up your ass right now, but I got to let everyone know. There is a huge liquidity pocket right here at 86 cents. Something is going to happen when we tap 86 cents. Question is, what's going to happen there? We don't know. But somebody's got a motive. Somebody thinks we're going to get there. Why would they put that there? Think about it. Again, these will tell you where we're going, you guys. X versus ETH on the right, chart 37. Again, we're almost out of the wall. We're like literally about to fall. Like, look at, there's no liquidity out here. And I don't think anybody's going to be adding liquidity out here before the fork because then they don't get their duplicates on the new chain. So think about that. If nobody's trading the Hex ETH pair anymore because there's no liquidity and all the liquidity has to come from USDC, it's only going to come through routed through these two pools. Meaning we're about to fall off a cliff here, about to fall off a cliff here, and we're almost about to fall off a cliff here. Well, there's not a lot of liquidity out here, guys. Like, the price is going to move fast. So seriously, like, buy like right now. Like, buy now and don't buy in like 2 days. Pulse chain is coming. All right, what else you guys got?
Yeah, I'll save my for the pulse chain one. There's a cool slide you have coming up, so I'll add my comment there.
Cool.
I guess what I'll say is, if you don't follow Silver on Twitter, you should, because he posts a lot about liquidity and on-chain transactions if you're into that kind of detailed data. Because that's like looking at the thrust, right, and the change in activity is a good way to figure out what sentiment is in the market. And we used to talk about sentiment all the time. And it's an important factor for how markets operate, right? This is why you can look at liquidity and try to ascertain what's happening, because that's a function of people's reaction to what's happening in the market, right? So while you don't have to be a pro, you can look and compare and contrast. A lot of the things that the guys that you're listening to right now on the stream learned are just by watching charts and trying to, fathom what something could mean and then recording it for future reference. I mean, that's how this game works. This is how you learn this game. Capital flows determine everything, and understanding liquidity is critical, especially in a market where people do not understand. If you have any kind of trading experience and you're new to the cryptocurrency space and you've been even break even successful, you have a leg up on literally everybody else in this space. As long as you understand that cryptocurrency is just software, because everybody else tries to act like it's not. and that's where they fail, simply put.
And software evolves. That's the key point.
Yeah, pretty much.
Look, Hex is evolving, not by its own code, because its code's immutable, but it's being transposed onto a new network. So thusly, those are a reflection of the strength of Hex. Think about that.
Well, think about how timeless Hex is,
Mm.
right? And I think
The
this
thing
is
literally encapsulates time, literally.
exactly. This is why it doesn't have to change, right? People don't realize that some things are just made to be what they are always going to be. And Hex is one of those things. It's like time, or it's like a clock. There is no changing that, right? Like, like the way you keep time is kind of how you're going to keep keeping that thing. And that is not going to change anytime soon. I mean, I think if it was, we would have changed it by now, right?
I'm working on it, time travel, but I'm not going to speak about it here.
That's we'll keep that to ourselves. That's for later.
Yep, we're
But
saving that. The Hexicans are going to do a lot of good things in this world. That's all I got to say.
we got nothing else to do, bro. Right? So, but the point is, right? Educate yourself, please. It's to your benefit.
All right. We're moving on, folks. We're getting close to the fractals. Probably another 3 or 4 slides. We'll start doing projections. So if you want to start to bring in all your newbie friends so they can get hyped over the price targets, that now would be the time. But before we get there, we got to do a little bit more educating. So we got hex correlations. For all you people that talk about correlations like you know what's going on, let me tell you something. Chart 38 on the left is showing a clear decorrelation between hex and everything else. Why? Because the liquidity is set up so that it pumps when it wants to. If you look at the middle chart, chart 39, this is what's called a correlations matrix. I would turn your attention to first Bitcoin and ETH at the top left corner. Bitcoin and ETH, their price moves together up and down 80% of the time. They're basically the same asset, except that ETH runs a little bit harder up and a little bit harder down. And everything else in the middle is just not interesting to me. There's nothing going on there. The communities suck. The price charts suck. Like Hex is easy. Check it out. Bottom line, Hex. It's not correlated to Bitcoin. It's not anything under a what is it? Royals? What's like a neutral correlation is it applies to all these values except Sol. It has a weak positive correlation. If you look at the end there, okay, bring your eyes down to the hex box down here. Go all the way to the right and to the 0.36. This means that 36% of the time, the price of Hex moves with the price of Solana. And we have a theory why that would be. Because Hex isn't correlated to anything. And what we came up with was, and here you see chart 40 on the right, Hex price versus Solana price. Every time Solana goes down, ETH gas fees skyrocket and makes Hex unusable. So people can't buy Hex. So that's where the correlation's coming from. Duh.
That's a good catch.
So here's the thing to note. Only real cryptos, real ones, trade on chain. And none of the other cryptos that's going to get launched now or in the immediate future is going to have a liquidity setup as good as Hex. You have you founders out there, you need to go back to the drawing board, look at your distribution models, look at everything, and just think about what you're doing when you airdrop, or what you're doing when you give away free coins, or when you don't give yourself a treasury to make sure you can protect price with. There's things that needs to be thought of in advance. And Richard Hart has been ahead of this game so far for so long. He's such an impressive character in the space. Got a lot of respect for that guy. Hex is
There's
a
more than
pure
enough room
market.
in this garage.
Probably
to
the
build
only one in
altcoins office.
crypto.
The only
It
problem
doesn't
is
correlate with
way
anything
too much stuff
outside
gets
or
in the way.
inside
And so
crypto.
this video is not
Common
about
thing. It
building
moves
my
at its
office.
own
This video is
pace.
about getting ready
When
to
it
build
wants
my
to move,
office
it
by
moves.
building a storage room. That way all my stuff is centralized, organized,
You guys
and
got?
dust free.
Well, you want to go or you want me to go, brother?
Wave, you muted?
Yeah. So this is something that I thought was really cool. So if you guys look at the price charts and
With that wall
both
here, I can start working on
big
framing.
moves
And in order to
on
do
the
that, I have
charts
to set up shop
laid
in this
out
room. I completely
while
filled my shop up with
everything
all of the
else
stuff
in
that was
the
in this room
market
so that I have room to work. So I just grabbed my job site
in
setup, cut it
either
down
a
to 2 by
flash crash or just some sort of wildfire going off in the market. So May of 2021 of last year, when Bitcoin ETH
The plan is to span these two walls with a new wall.
on
It's a doorway in the
fire
middle of it. And in order to
during
attach to
that
this
flash
outside wall, I've
crash,
got a conduit in the wall. So I
Hex
just took a
was
couple of scrap
ripping.
offcuts from
That was
two by
during
down
its
to
bull
size,
market
and I
up
nailed them in
to
around that
50
conduit.
cents that lasted until September of
When
2021.
the drywall goes in, I'll just cut a notch around the conduit and
That
it'll be seamless.
that same
With
explosion
that outer stud made, I can start laying out the rest of the studs for the wall. I've got the top and bottom plates right here, which are the width all the way to the
if you
door,
look
and
at
then I lay
the
out each
COVID
individual stud,
crash,
making sure to separate them by
Bitcoin
16
ETH,
inches on center.
altcoins
After that, I
on
can start apart the
fire,
plates, insert the studs, and nail
and
them off.
Hex had a huge move to the upside. So it goes back to the whole thing with everything just being on chain and not having this nasty coupling to off chain.
The second
The
side of the wall
off
is
chain
the same as the first,
world,
except for a little bit smaller, and
it
I'm
just
using
changes the
top
game
plate a little bit long, and I'll show you why in a
entirely.
minute.
I get there's some level of correlation depending
When
on
designing this room, I was a little concerned
what
about the strength of
time
the ceiling,
frames
so I
you're
decided to
looking
cut
at.
down a
The
couple of 2x6s
reality
to
is
put
that
against the back
both
wall as
big
structural
moves to
support.
the
These are going to have
upside
kind of like posts to
happens
support that back edge
when
of the ceiling.
everything
When
else
framing,
in
I
the
like to
market
rely more on
was
compressive strength
going
than on
down.
shear strength. Shear strength is like the strength of a screw from snapping versus compressive strength is when you stack things on top of each other. You can certainly get lag screws that'll hold, but compressive strength is always going to be more reliable.
So, this is my turn.
Yeah. Want to talk this slide?
Yeah. Correlations, bro. I mean, this is
Alongside 2 by 6.
This is a pre-cut.
Sorry, 'cause I
so
moved
that means
forward.
that it's 3 inches shy
Wait,
of where it
what?
needs to be.
Did it
You
move?
have
I
to
went
right before
forward
top.
for a
So
second.
that's 1 inch and a half each. That adds up to 3 inches. It's a pre-cut for convenience. The only problem is at the store, it's really hard to tell the difference.
Yeah. Why is Hex decorrelated? Why does it have no correlation to the rest of the market?
With the right size 2 by 6, I can start nailing things
There's a lot
together.
of
These are called
different
joists, all these parts that make up the ceiling
as
/ floor.
to why.
And the ones that go against the wall are the rim
And
joists, and
it's
those support all
important
the
to
floor joists.
understand
And
them
then the hinge
all,
joist is what goes on the end. This is all to say that I have to
right?
nail on the hinge joist
Because
first because I think
your
nail gun behind it
markets
once
are
it's
not
connected.
static. They're dynamic. So what that means is that over time, things are going to change.
It's at this point that the
They
room
don't
is finally starting to
stay
take shape,
in one
and you can see the
place.
reason why I left that top plate long. I want to be able to connect it to
And
the
this
doorway,
is
and I also
why,
need to support it, so I'm going to nail on
theories
that
change, nothing stays the same. I mean, there are periods of time where Hex is correlated to certain markets, and that's because you
On the
have
final check for level, I found out that this rim joist was a little bit out, so I just added in a couple
within
of
the
stems.
space
That managed to take care of it, and then I could attach it to
where
the
they're
wall.
going to react to what the
The
rest
screws
of
that
the
I
market
use
is
to anchor
doing.
these joists to the
And
wall are
there's
structural
nothing that
screws, and
anybody
that's
can do
important
about
because
that.
regular screws have a
Like,
tendency to be
that's
very
the
brittle,
one
so
few
they're strong, but they
time.
will snap.
That's
Anchors
the
like
one
this, and
time
giant
that
bolts,
Hex
we use those
actually
because they
is
bend rather than snap. To hang the rest of the joists, I'm going to be using
something else.
joist hangers. These make
And if
installing
anybody's
joists super simple,
curious,
and you just kind of bend them into place. I've
it
got each
looks like
spot
a
marked with a pencil line
$22
that I drew
million
earlier, and then I
buy.
just nail them off.
You know,
In the
like
spot where there was a seam,
one-shot
I nailed on
slug
a
would
4x4
get us
hanger,
to a
and this is
buck.
going to allow
So
me to
knock
hang two
yourselves
joists in
out.
the same spot and just add a bit more strength there.
Hell yeah, Dylan.
A 4x4 is slightly wider than two 2x6s, so I added in a little spacer.
Cool, guys. We got
Consider
the
that headline down,
fractals.
and
Let's
then nail them
go.
together.
This is the exciting stuff.
I also ran around and nailed all the joist
Good
hangers into the joists, locking them in place.
All right.
The last step on the
So
floor
I'm going to
/
turn your
ceiling is
attention
add a couple
to
more rim
chart
joists. These will tie all of the pieces
41,
together,
upper
and
left,
I'll end up with
top
a really
pane.
strong, sturdy construction that I'll
We're
be able to walk around
comparing
and store heavy things
Bitcoin
like that.
from 2010
And now that I have a nailing surface, I can also nail the
beginning
top plate of the
till
wall into those joists.
2014. And it's two major
The top of
first
the wall
bull
is now anchored,
cycles.
but the bottom is not. So
There
you
was
need
a
to correct that.
bear
I
market
plumb
in the
up the wall,
middle. You
and
can
fortunately there
see
was a stud
around
behind one wall,
2012.
so I
I
screwed
think
that.
it was
To
around
get a
when
little bit more
Mt.
anchoring to
Gox
the
went
floor,
down
I
and
had
got
to drill a
crashed,
concrete.
and there was
I
a
used a
lot of
concrete
FUD
bit with a
this time
camera
in
drill setting on the
history.
drill and took my time, drilled a deep enough
And
hole
in
to the
the
right size for
bottom
the top
pane,
on
you
screw.
can see that
These can
Hex
be a
is
little
not
temperamental. I
suffering
like
from
to
that
clean out the
FUD.
hole
Now,
before I drive them in.
first
And also
part I
use a
want to
washer
point
so
out
to bury
is,
the head of the screw into the 2x4.
Bitcoin was unable to
With that,
hold
the
the
basic
lower
framing of the room is
band
done.
of this
There's still a
Gaussian
lot left to
channel.
do. Need to build
It fell
organizers,
right
put the
through.
walls on, and put the top and
And it
ceiling on.
fought
But it
back
started to feel
up,
like a real
and
space.
then it just fizzled for a long time. Back in,
As I
there
mentioned
wasn't
before, my
really a
shop
lot
is
of
a
knowledge or
complete mess right now.
exposure for
So I
Bitcoin.
decided to
So I
move
mean,
operations outside.
that
It's
all makes
springtime here in
sense to
Seattle.
me.
Weather's getting nice. The only downside is
But
that I have allergies.
we're in a different
And
age
just a
now
street sponsor
where
just
we're
picked
in
me out.
an
More than 50
on-chain
million
world, and
lives
there's
suffer
so
from
much
allergies. And for me, it's the crazy
knowledge
amount
being
of
spread
free
about
pollen
this stuff
FDA-approved medications,
that
personalized
I don't
plans, and
think
convenient
Hex is
home
going to
delivery
suffer the
description,
same
they will set up a consultation
long
with Docker,
sideways
think of it
downside
as a tree. If you need an
action.
analogy on the link in the
So
description,
then we've
or
already
the
hit
analogy.
80%,
Basic
and
analogy,
we've
how
bounced
about
now twice off the lower Gaussian band. Twice. Or,
I spent a fair amount of time
Bitcoin fell
designing
through
the
in like
shelves
one
for the
swoop.
storage room, they're based on a lot of the stuff that we
So
already own. And then
what I
also some
did
logical
was I
bends that
took
go into
this
individual shells.
I took
The
this
stored room
green
is
arrow,
gonna be like 90%
took the
shells,
bars
and I'll do
pattern.
my best to
We're
maximize
just going to
usability
cut
of
out
the
all the
space
sideways
inside
action because
of
it's like,
units.
all right, we
The
got
first one is
smart
gonna be the
market
largest one that's gonna
makers, the
span across
liquidity's
the
looking
entire
good,
outer wall
everything's
of the storage
peachy,
room.
we got
I
pulse
designed it so
coming
that all the
out.
legs are exactly the same. They're
It's like
gonna allow
all
for
these
smooth
factors
shells.
stacking on
Underneath the
top of
tops
each
of the
other,
shells, I got a couple sheets of
which
plywood.
makes me believe that we're about right here. We're
The
about to
price
see
supply
a
right now is
massive
pretty
hockey
insane,
stick
and I didn't want to waste any of it
in
this process. So I
front
decided to
running the
divide up the
launch
sheet in
of
half and
Pulse
cut them
Chain.
into thirds,
And it
and
would
that
look
gave me
maybe
6 shelves
something
per
like
sheet of
this.
plywood without any
You know,
waste.
maybe plus a little bit, maybe farther out a
To join
little
the plywood
bit,
to
but
the 2x4 legs,
generally
I cut out notches at
give
either
about
end.
a
The outside
minimum
notches
of
were full depth of a
360
2x4
days
on the
of
side, which is
upside, about a
1
year
and a half.
until
On the
we
insides,
top
they had to
out
overlap, so I could only go half
in
that
this
depth. So
scenario
3/4 of an inch,
around
which
the
should be
$12
plenty as long as I can figure out how to
cent
assemble.
range at the top of the regression band, where Bitcoin also hit the top of its regression band. On the right chart, chart 41B, I know it's small, but I just put this in here for effect so you guys can see the clear curve of the trend. And that if you took Bitcoin's price action, it like literally fell out of the trend already. Like it wouldn't have worked. That's from 2010 to 2017. Take the first two bubbles and you overlay them onto Hex, as if Hex is doing its gains faster and in quicker cycles, which it is. Math, it's real. And then we just took this whole parabolic arc on our last bull run, and we just overlaid it right here from our bottoming pattern. And this is looking like something that could happen within the realms of our regression band. I don't think I see us breaking too much farther to the downside. I think our bottom is in and we're going much higher. There may be some consolidation along the way and a lot of volatility. That's natural. You get people taking profits that have been waiting, people that bought at 50 that need to get out and stuff and pay for things. That's okay. Give them their money and get them out and make them happy, and they'll come back to buy it $5 or whatever up here of this middle band. That's cool. And the key, the most important thing to remember, and this is something that's been hammered on all night, and it's the most important thing, is the reason why Hex can produce these mathematical geometric patterns over and over again is because all of the trading is done on chain. So that means that one Hex is worth X of something else, and you can only swap like kind things. So there's no futures contracts, there's no margin trading, there's no any factors outside of just I have X crypto sitting in my wallet and I have to use the blockchain to change it into something else. So everything's mathematically, computationally playing out geometrically in the charts. That's why these fractals play out textbook time and time and time again. It's an undeniable truth of 100% backed spot trading. You can't cheat math.
Never. I mean, again, there's a reason that cryptocurrency exists, right? And I think it's very important that if that little message is lost on you, that you do your best to try to understand why, because that's important. That's how you make sure you end up in the right asset, not in just any old rinky-dink wannabe cryptocurrency, because that typically leads to epic failure, crash and burn.
Nick Wave.
Yeah, so the this is where the the selection ultimately long term it does matter, when you look at the performance of these assets, because a very good example of this historically is if you look at a lot of coins even versus Ethereum as a baseline. And granted, I say this, I hold a decent amount of Ethereum. It's just I know that with a lot of the altcoin speculation in the market, the reality is like a lot of those coins bleed out versus Ethereum in perpetuity. So to me, it's just very bullish when I look at the macro, the macro structure, what's taking place. So I just view, I call it the three kings, and I have my big three, what I call the three kings. So and then for me, it's Bitcoin, Ethereum, Hex, and the justification for each one. This is why when Axis gets to the slide later on for Pulse Chain, there's something really cool I can add there that I think a lot of people are not really considering when Pulse Chain launches.
Cool, man. I'm excited to hear. Moving on. These two charts are just potential bull run projections for 2022. You can kind of see on this left chart that it's a similar looking curve to what's over here, where this is like basically called a consolidation curve, I guess I'll call it, where price is going to try to revert to the mean, but it'll be super volatile up and down, upside and downside of this blue line. And it doesn't really matter what the price does, but that there's a target up here that the market operators are aiming for. And you know, the price action could play out like this, or we'll get into the potential why a dump like that would happen or why a pump higher would happen. We'll get into that later on. I just put that there just so you could kind of see for scale that by the end of the year you could be sitting easily above $1.20, $1.80, depending on how things play out between PulseX and ETHX. Like, you got to remember that the valuations will probably get cut in half because the value will be split into two effectively, depending on how things play out. That's the exciting part about being in on this during this time, pre-fork. On the chart 43 on the right, it's just a cute little wave. Like, look how clean that is. Like, that's got us going to $22, guys. Like, we just got to break above and hold that $3.80 level as support, and then if with enough momentum, it's easy to get up here before I start to get a little top heavy. I think I'll just keep going through the fractals here. Chart 44 on the left, you have last year 2021 bull run. On the left here in November, we had the big payday. That would mark the end of the adoption amplifier phase, and then it immediately spun up after that. Consolidated. Got a little above the high. The whales let the last plebs get out, and then they push it higher. And then everyone else was like, oh my God, Hex is something real. And then they started buying. And then you know what happened after that. So I'm just drawing that comparison to here, but except that on the right on chart 45 in the purple Fibonacci channel projection here, that this move is still just this tiny little move here. Like, all of this upside here, it's coming way down the chart past where this goes. This is just like a short-term thing. We don't know how the pulse chain is going to affect the price of EHEX. Could run up, could sell off, could hold one of these levels. We don't know. Like, unless you're the market operator, you don't really know where you want it. You guys have anything to add to this?
Yeah, I think the fractal looks good. And just the point you made earlier as far as how the fractals play out when you're comparing. That's a really good point. That's a very good point earlier you made, where you can make you can make these statements with on-chain data versus that is off-chain. So I never actually thought about that. So that's these are why these streams are really powerful. Is you learn something.
Oh, dude, I
new
learn
every
stuff
time.
from you guys all the time. Every time I get it on with whales or you, it's like there's always something that's said that's like, oh, duh, I knew that, but I didn't know that type of thing. You know what I mean? Like, you don't realize that there's something buried in your consciousness that's like, oh, yeah, that totally makes sense. That's why, wow,
Yeah.
you filled in a hole that I had. All right, moving on. So chart 46, top left. This is the most recent price action. I know it's small and it's not really that important to note, but I mean, it's important to know because this basically proves that we bottomed, because the Gaussian channel flipped red. I think this is a daily chart. Nope. Yeah, it is a 1-day chart. So this is just saying that we flipped red. It looked like it was going to go down, and you guys all anyone who sold got ganked, and it flipped green again. So basically, this was at 17 cents about a week ago. It popped up above this red 200 daily moving average, and it's holding it as support right now, and we're going to go higher. Like, here's that hockey stick we're looking for. And if you look down below chart 46B, the RSI, MACD, and DMI all reset. The freaking market force is just chilling, balling out. Selling is pretty much stopped. Buying is just like keeping up with the selling. We're starting to see some upside. Everything's looking good. I think this is a monthly too. So like we held above 50 on the RSI. That's I don't think I've ever seen that before. What do you think?
Yeah, it looks bullish.
It looks bullish to me. I mean, total reset, flipped green on the Gaussian band. We're holding above the 200 day. I mean, what more do you need, guys? That's a triple indicator right there. And then on the right on chart 47, I just wanted to. This was one of the older charts. I did this like a while back, but just another. The RSI got above the 55 level, which is Wales's top of Wales's upper range of his support, like middle support band thing that I've been using, and Yeah, I mean, everything looks good. We're gonna go try to get to that yellow line, the yellow dotted line at 72. I think we did actually. I think we did do that on some of the other time frames. Yeah, I mean that one again. This one, same thing. It's got us going to the $19-20 region, upwards of $30 ish. This little two candles here is a $10 move. When we're out here, all these candles are going to go flat because that's the scale of the magnitude of what we're talking about for a move here. These candles will look really big. Everything else will look like a freaking pancake. This won't even be nuts to look at. It'd be cool. So yeah, total reset on the indicators. Now, if you're trying to buy, you're trying to sell. I don't know what you guys are trying to do. You got some people in both camps right now, but I'm just trying to give you the realistic projections of short term what I think might happen. And listening to this stream, and you think one way, there's somebody else thinking the other way. So there's just never been this kind of opportunity with the launch of a new network like this, especially for Hex, obviously. So if you turn your attention to chart 48 on the left, this is the bullish case, and it's got us, basically bouncing off support. I was a little early on my projection. We actually came down slightly below that yellow band, and then we went higher, but I was close. And so, like, if you're a long-term thinker like I am, this is a perfect area to buy. It's 80% down. All the indicators are reset. Everything looks good on the liquidity side of things. I mean, this has us like chopping through this consolidation range, and then we're going to get up above the 1.618 level here and sit on top of $1.20 to $1.40. Same way we did in the first cycle. Down here on wave one, bottom left corner, had this consolidation range, the original bull run, an expansion wave up from the 1.0 here through to the 2 level, 2.0 level. This was like a 10x, and then it consolidated. And then we had the anomaly of the big payday pump, which gave us direction. And then we continued to consolidate one band higher between the 1.0 and the 1.618. Found support on the 1.618 and blast off. So what we're looking for is chop, 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 break this, get up here, support on the 1.618, blast off. Bearish case, right chart 48B. This is the market cap of Hex. And I just wanted to remind everybody that, yeah, the coin supply isn't getting doubled on ETH Hex, but effectively the value is getting split because it's like a stock split, like a BPD. It's a big payday 2.0 effectively. So in the event that we do get a massive sell-off on either side, there's huge opportunity zones down here that you're going to see in a bearish scenario where you could maybe be buying things for maybe even just a day. Like maybe it just comes down here for a day or a week. And then like because of all the influx of new money, remember what happened when money was expanded into the supply of the US dollar? Bitcoin ran. So if more dollars are coming into the Pulse chain and there's Hexicans are the main holders of that token and the arbiters of that chain, they may be able to take gains gotten on Pulse and bring it back and store it in EHEX or PHEX, depending on what kind of play they want to do. Just wanted to note that there is potential opportunity zone down here if you do get a post fork dump. So yeah, Wales, you want to say something?
I was just gonna say, man, I wish.
I don't think okay. So if I had to put it on odds of probability,
I don't see it happening.
Hex can sell. I don't think it's coming down to like. I think once we get above the all-time high, I mean that's a wrap. That's just what I think.
Yeah,
pretty much. Yeah, I think it's gonna be hard to see it at these price levels again once it just takes off.
Yeah,
because it's kind of like a reflection thing, right? Like you kind of got to just wait for it to do what it's supposed to do because you know what it. Well, like once you know what it is, it's kind of difficult to not see it doing that thing.
Mm-hmm.
So.
And whoever was out there that was listening that just bought $100,000 worth, thanks, appreciate it.
Yeah,
you're pat yourself on the back because you're a smart fucker.
Pretty much.
Mm-hmm.
Yep. I mean, it's simple math, right? Oh, why my transaction?
It's all on chain. It's protected by the liquidity. So just join team win. Basically, I guess is the argument here. It outperforms Bitcoin and ETH, which are the hardest runners in the world.
Kind of hard to beat that.
Yeah, to me, it's amazing how well I've never seen an asset do that versus ETH. Because again, you guys can, this is all information you can find online, but if you look at total 3 on TradingView, for example, you'll see that the upside on that is less than the upside on ETH. And total 3 is a representation of altcoins in the market. And Hex is trading at a much higher, it's completely, the upside has been ridiculous versus ETH, and the range, I've never seen that happen. This is completely a chart of its own kinds. And this is what I mean is like if Bitcoin and ETH start to drop, like ETH could even drop down to, you know, $2,000, and then a run up on that, it just increases the probability of a major flip happening, because a lot of people are thinking, you know, ETH flipping to Bitcoin, which sure, I think there's a good chance that happens at some point in the future. But again, the last run up Hex had up to 50 cents, it hit 80% of Ethereum's market cap. And if Ethereum is trending down, yeah, it's crazy. Like if Ethereum's trending the opposite way for a period of time, it just makes it a higher probability that we have the first major flip in the market. So I think it's very plausible. Again, I'm not projecting absolutes. I just look at the charts, and the charts are very, very bullish. The range is insane, guys. It's a higher low on Hex versus ETH. I've never seen this on
nothing does that.
Yeah,
it's amazing, and it comes back to your point that we talked about off stream the other day, that, you know, ETH wants to take over Bitcoin, and it likely will, and it may soon, but likely will long term. But it's correlated 80% to Bitcoin. So good luck taking over the thing that's attached to your hip. It'd be like trying to get rid of an abusive wife that you're locked in with, you got 9 kids with, and yeah, she has control of all your private keys. It's like, no, like use your brain, take control of your finances, buy some Hex, stake it, and just let the thing work for you. You can go do what you want to do with your life. Moving on. A couple more Hex fractals. So on the left, we have chart 49. On the top pane, we have Bitcoin and a potential downside consolidation, fake out move to the upside, and a downside. The upside downside moves on this panel is irrelevant because it's headed down. 200, this red 200 weekly moving average is like a gravity well trying to pull the price down, and it wants to touch that level. So it doesn't matter if it happens here, here. Like there's going to be opportunities to buy Bitcoin at these levels if you are patient and you want to do that. And then conversely, if you want to make money a little bit faster, I would take the asset that's going to run like right now, obviously. Just showing like a quick projection. This is our pop up to $1.40 like I had on the previous screen. So it doesn't, this move to $1.40 doesn't look like jack shit compared to where we came from, you guys. Like, and all these coins back here that were purchased by whales, they're in strong hands now. Like, I don't know anything else to say. Like I don't want to trade this. I don't want to buy Bitcoin. I used to mine Bitcoin. I dumped my Bitcoin mine. I built a Bitcoin mine with my own bare hands during the bear market back here. Suffered through all this price action, watching my miners like bring in jack shit for like 3 years. Then, hold on. Then this run up happened, but I was already kind of like checked out of it because I found out about Hex. You know, when it was out, I bought it, and then right here is where it began. This is where Hex began, right here at the COVID dip. Hex began to outperform everything. So like I only had this amount of time to figure out, oh man, I should probably really be adding to this thing, and it's not just about Bitcoin or just about Ether, you know, whatever. So it's an opportunity cost to buying Bitcoin here and waiting 3 years versus buying Hex here and having a position for the rest of your lifetime for your kids and your kids' kid. Because once we break these levels and go higher, you don't come back down to these levels. This is like early Bitcoin. It'd be like saying we're gonna go to like $10 and we'll come back to like 0.005 of a penny one day. It just doesn't make sense, right? And then if you look at chart 50 on the right, this is a chart that I drew back in October, you guys. October. We were just dumped down to like, I think it was that big red candle. And I was like trying to figure out at the time of scrambling, trying to figure out where's the bottom, how can I draw these arcs, how can I figure this out? So what I did to try to figure out a mathematical way to figure this out was I took the Fibonacci fan tool and I expanded it from the base of the starting price at the low out to the top of the first expansion wave. And I called this the expansion fan. And why do I call that that? Is because after you peaked on the expansion fan, you got a consolidation fan right thereafter, where for about, I think it was like 9 or 10 months, we consolidated in a huge 500% range, got really tight in the volatility and squeezed up and created a new expansion fan. So what I did was I just took the previous compressed Fibonacci compression consolidation fan, and I just copied it over to here and copied the price action from here and put it right on top of October. And look at what happened, guys. Bottoms out, similar to where we were. It didn't quite get down to like that 8-9 cent range, but it's close. Sideways, we're right here. This is May. We're right here. We're just going to start getting in our consolidation range before we blast off at the end of the year. So, I mean, but this could be a 500% range with all the volatility on both Pulse Chain, Pulse X, all the coins, meme coins. It would be dumping Hex for whatever shit coin of the week. So you take advantage of those dips and just know that once we get out of this accumulation range, this consolidation fan, that there will be another expansion fan to come.
Oh,
Okay, so Wave. This is for, I did this one for Wave. So this is a Ethereum chart. This is a Fibonacci 2 cycles long Fibonacci extension tool put over the Ethereum chart to kind of give you guys an idea what you should be doing with your Ethereum. I think I already talked to Wave a little bit about the theory and thought process behind it, but I actually want him to kind of explain the chart and go and take it from here.
Sure. Yeah. If you guys look at the just as a baseline, let's start where ETH first started trading in the market. Yeah, right down there. So we had that first wave to the upside. So we had wave 1, which was a huge move, followed by wave 2, where there was that capitulation. That was 2016 ETH, followed by then the wave 3 tsunami, and even a partial double bubble up to that $1,400 blow off top. So
talking about this peak here at 200 something, and then a down back to 50, back up to 200, sideways consolidation, then explosion to $1,400. Sorry.
Yeah, and that was a very, that chart was beautiful. That's one of my favorite price charts to look at because it's even just an aesthetically pleasing price chart. And that even now brings us to the prices, today with respect to Ethereum. And what's really cool that Axis has on this chart is he shows that kind of green band that transitions from green when it's above and then drops to red as it drops below during the bear cycle for Ethereum. That was it. It was close to a 2-year bear market before that move from about $100 ETH close to $5,000. So my take, at least on Ethereum today, is there's a lot of similarities with respect to what took place on 2016 Ethereum, and the price chart has that capability. Not that this doesn't have to happen, but the price chart can certainly capitulate down to levels that people aren't necessarily anticipating. And again, it doesn't have to happen that way, but if it did, that's where, as Axis has highlighted on the chart, it is possible you could get an $850 wick or
right here,
1,250 base for Ethereum. And then there's a very good point that Axis made with respect to that fractal as far as creating that next build up for
this here is what it's speaking of, where we would bottom here.
Yeah,
I think it was the $82 level back in 2018 bottom. And then it ran up and had, I think it went to like 280 or 260 or something. And then it was like, and then everyone's dreams just faded, bro. It was the shittiest thing in the world.
Yeah.
Especially if you're a miner. But what I think is actually happening is if you don't, so this is in the event that you don't get your extended bear cycle where retail basically capitulates into the hands of institutions at sub 20K Bitcoin, sub 1250 ETH, those levels, you would capitulate down. We might just go right. We might not have to do a second leg sideways. If institutions get the price they want, the sideways can be over. That's fine. But I just feel like not everybody's on the same page, I guess.
Mhm.
So we're just trying to protect you. Like, you're good to buy sub 2,500, or you're probably even better to buy sub 2,000, and that's a really good buy point if you can get that. But
Mhm.
just keep in mind that if this green band continues over the price action here like this, and ETH continues to fall, that if this does turn red, be prepared for some turmoil.
Mhm.
And it's so correlated to Bitcoin that Bitcoin's going to make the first misstep.
Yeah. Yeah. There's and what's another really good point Axis just mentioned is that that sort of retest during a bear cycle. So if you consider the 2016 sort of fractal for Ethereum, you can have that capitulation down to that $850 wick, as Axis mentioned, or even a price above that, and then that could actually end up being, the floor before going into the next cycle for ETH, and it'd be very similar to what took place in 2016. It's just on a longer time.
I just had a thought. Imagine if the merge is successful and the emissions is lowered, and maybe that is the moment where ETH can finally decouple from Bitcoin, and you do just continue to rise as Bitcoin goes sideways. It's a possibility. I'm gonna throw it out there.
Yeah,
All
absolutely.
right, we good here?
Yep.
All right. Got a couple more fractal charts, and then we're gonna get into some deep data. There's probably about 30 more charts, guys. So we got about another 45 minutes ish left on the stream. Turn your attention. This is again similar to what I had before with that Fibonacci extension tool. The theory here is this original bottom left corner, cycle 1, went from a low price of the all-time low, peaked here. I don't remember the price. It was like 3 zeros and a 5, and then it hit its wick low. That's cycle 1. So it projected out these red lines, and these red lines are Fibonacci levels. So the 0.618, which is a mathematically significant level for trading, the 1.618, and the 2.618. Now the interesting thing is, when it broke, Godwell candle took us straight to the 1.618, and the stimulus from COVID came in, and everybody else bought behind them and got us to the 2.618 level. Then we started our bear cycle. So then that's where I come in with the yellow dotted line, which is market cycle 2, from the low wick low off the original support line, to the high, to the low of the big payday low, and that projects out these yellow 0.618, the 1.618, and the 2.618. And if you notice, the 1.618 level is around the all-time high here. It's funny because the price literally went up, mathematically sound code, and just all on-chain swaps, all true on-chain price discovery, and tapped that perfectly 1.618 level. Amazing. And now I created this new cycle, right? So we had this huge bull wave, the blue dotted line. The 0.618 is sitting at that 380 level I'd mentioned before. Or if we can flip that to support, we can start consolidating in a huge range between $3.80 and $13 before the real expansion comes after that. And if I show you the target up here, the 1.618, look, on the yellow cycle, we consolidated between the previous cycle's 2.618 red line and the next cycle's 0.618 yellow line, consolidated there, and then our expansion came right off of 0.618. So if we can get above here, if we can work our way up to here through pulse chain launch, this is getting into the middle of the summer, and flip 250 support on the 0.618, the expansion that can come after this consolidation is done. This can just go like this is basically marks the beginning of the expansion part where things get kind of nutty, and the upside projection of the 1.618, which had been hit here on the previous cycle, is sitting around $600 to $700 per hex on an extreme blow off top. And that's like out into 2024. We'll just have to depend on how long the cycle lasts and how many people actually get this thing figured out before it's, before the whales, run it up so hard that we have to have a little bit of a downside move, maybe early, to allow people to buy around like the $20 level. I think maybe you could come back down here to these levels easily down to $10, just the same we did with 10 cents. So, I had like a little drawing up here, up in the upper left corner chart, 52B, of kind of what that price action might look like. Like we might get our pulse chain launch, little consolidation, spike down of dumb sellers, and then, you know, pop right up here to the 0.618, and then do a consolidation, and then that'll begin our expansion phase. We might bounce off the base trend line. I don't know. I can't read your guys' minds. You guys are all the market participants. I can just tell you what the math is saying, that if X amount of dollars is inputted and this line holds, this is where the price goes, basically. It's all up in here. Like, we're going to hundreds of dollars per hex.
Mm-hmm. Yeah,
Comments?
the ratio, the upside ratio on it's just the hex to ETH chart is going to be amazing.
Wills, you want to hop in here on this conversation?
Yeah, man. I don't know if you've ever seen my prognostication for the next bull run, but I'm hypothesizing at least 512x.
Shit, let me do some quick math. What is that? 20 cents times 512? It's 1,000.
Nah, it's gonna be from the bottom, so it's gonna be
Oh,
52 bucks or some crazy shit like that. I can't remember the number. Hold on, let me pull it up on my V1 because I already have it outlined. But the theory is as follows: given that Hex is log base 2 functionality, the first pump that Godwill got in there and took us from A to B, that one was 107x, so close to the 128 marker. Then you look at the next pump, which was, or maybe I should share my chart. Hold on. Let me get rid of this. Share. Give me a second.
anybody that's on Wave stream, just patience here, because Wales is going to pull up a chart for a second.
Yeah, just give me 1 second, guys. Just so walk through this theory here so you guys can understand what it is that I'm saying and it doesn't sound like Chinese. All right.
All right, well, here it is.
All right. So this is the first initial pump, right? This is 107x, right? Bottom peak to trough, or trough to peak. Okay. And then the second one came here from big payday low to the most recent high of September 19th or so. Yeah. What do you see here? 256x. So we went from close to 128 to 128 times 2. Now, as you guys know, I've shown you how cryptocurrencies work and how they're all just software and how we can ascertain the characteristic of the software. And for Hex, we started with 128. And then what did we have after that? 256. So I'm hypothesizing that the next run is going to be 512x. Now, why? Well, what constantly happens? T-shirt rate only goes in one direction. And that's really the only thing that matters. Everything else is irrelevant because what's happening is that during this time, you only had to get 10,000x per T-shirt. That's it. Here, it became 16, 12, 15, 20,000, right? Or 18,000, whatever it was, up until this point in time. But now it's 20,000 plus. Now it's a different ball game altogether. Now you got to pay for these T-shirts. They're not free because they're not giving you nothing, and you're not just getting fiat returns. You're getting the best returns, which are crypto returns. All right. So where does this take us? Well, if you take into account this bottom here, 10 cents or so, and we're gonna pop out 512x. Well, shit, I don't even think I can do this on this chart. Hold on.
Start scrolling that down, yeah.
Yeah, it's kind of ridiculous. Yeah. So what do we got here? 303 days. So let's go. What's that? 303 days on 30 days. Yeah. So let's go out about 600 days on this. Maybe 500 is more appropriate. 550, and we're looking for 512. That's too much. It's too little. That is almost just right. Boom.
They
Good
got
enough.
a $56 target.
53, 52. Because we're just talking about 512x, because the theory is because the T-share rate keeps forcing you to buy more hex to acquire that unit of yield. What that means is that it requires people to buy more freaking hex.
Mm-hmm.
So that means the price has to go up faster. This is why we had to do.
Well, it's not like the
112.
liquidity got bigger. You know?
Well,
And
it's
people have
not.
to spend more money to get more. It's like it's just it's a function that's meant to turn into a parabola based on the liquidity. It's going to
Well,
do the 500 and it's going to do the 500x.
what
Man.
people have to understand is how hex works. That is the answer to your question, how it works, what the liquidity is doing. Why is it that it flies like this? This is why we talked about that inflation chart earlier. I mean, if you're looking at that 3.69 number, you have to understand, if nothing else, that 53% of that yield is not being minted on an annual basis. And that was just year one. So what does that mean? Well, as time goes on, people are going to understand that delaying gratification is what gives you the best outcome. So based on that, people are going to take a different angle, a different point of view. They're going to approach the game differently because they ultimately want to win the game, right? And that's exactly what happens. Markets change their behavior. And this is why I can sit here with some modicum of confidence and say, yeah, we probably are going to see a 512x, because people don't understand hex. It ain't got nothing to do with market cap. It ain't got nothing to do with nothing that you hear anywhere else, because all
So
that
Wells,
shit is irrelevant.
this next chart is going to prove your point, kind of.
Mm.
It's basically going to the fractal shows like basically right to your level. If you, I'm going to skip. I'm going to go back here a little bit, and then we'll get there. So cycle 1, cycle 2, cycle 3. And how did I do these? Let's see here. I basically took, so this was our Fibonacci extension tool. Like, it's amazing to me that this price chart can hold within this fucking channel like this. But it goes up here, taps the high, comes back down, hits the base. It's still on point with these three touch points here. We're gonna find upward support. If you go to the extension tool, if we can get it, so basically the 2.618 of the previous cycle from this original wick low to top of the COVID pump to the bottom of the BPD, that projects out this 2.618 level. And previously, when that got flipped to support, there was like a bonkers move in this. So I guess the main point here was that so basically, if you cut the chart here, this is basically your 500x with all this like detailed price action. But like this expansion would be like, and like imagine Richard coming in with some like or whoever, an operator saying like, okay, there's no coins for sale up here, and nobody's gonna sell because there's too much confidence in the market. Well, then you need to run it up too high to make it crash even lower. So that would be like a scenario that would play out that would even exceed the 500x potentially. I'm not saying that's gonna happen. This is like a moonshot, bro. Like, I'd say the chances of this chart playing out like this is pretty slim, at least within this time frame, because this would have us up there by next spring, up to like $300+. And I think it's going to take us a little longer to get there, but I would not put it. I wouldn't say that it's impossible. But the 500x is actually pretty possible, my opinion. Just kind of, that's some stuff that you can't really project, or like, you can't. There's no way that you can know for sure. Any target under $13 is totally valid within 18 months, in my opinion.
Well, I think it's important. I'm sorry, man. Go ahead.
Oh yeah, I was just gonna add for the comment on the $13 target. So what's really cool is that a lot of the ideas there's a convergence on the thought process where all this is going. Because I remember even there was a little while back we were talking about if you look at the timeline where Hex is today, and I don't know the exact number at the time of this stream, but not too long ago it was somewhere between 800 to 900 days. And if you consider how many days took place on the Bitcoin price chart before hitting, those blow off tops at the end of 2013, and then you had the 2014 bear market. There's still about like another 1.5 to 2x multiplier on the time side with respect to where Hex is today. So what that means is like you have a lot of time, and you could see that time play out in a way that Axis is suggesting, and that that then goes into the idea of this potentially being the setup into that huge that next tsunami to the upside.
Bills?
Just gotta understand T-shares, man.
Mhm.
T-shares are the driver of why this thing is going to the moon.
Monetary policy, inflation rate. All right, we're gonna get into some. We're done with fractals. We're gonna get. There's a couple more charts later on, but we're gonna get into some more data now. This is some social analytics that have been pulled from Lunar Crush within the last 2 weeks. It's a 2-year chart. It shows in pink, it is the average social sentiment picked up across a variety of channels like Twitter, Facebook, whatever. And the thing to note with this pink average sentiment line is that in the beginning of Hex, we were at 0. People hated it. And Godwhale pumped it, and the sentiment completely changed. And we've never gone, technically, the sentiment has never been bearish. This is a testament to the strength of the Hex community and how positive they are on those social outlets. And just, everybody's working for themselves to pump their own bag. And I just love that about the community, because it's actually, you shouldn't feel bad about telling somebody to buy the best performing asset. Why would you? So it's just funny. When we hit our W pattern, this is showing that the bullish sentiment hit, or I'm sorry, this is social mention. So the day of when we hit our W pattern here on the green line here, that's a price. Like everyone, like basically all your smart crypto people, traders and stuff, they figured it out. And the talk of the town was, oh, it double bottomed. Like Crypto Sniper was tweeting it, Mitch Ray was tweeting it. Everybody that knows what they know, like the social metrics were saying the same damn thing. Moving on. X social. Top panel, chart 56. Bearish versus bullish sentiment. Pink line is bullish sentiment. Purple line is bearish sentiment. The most bearish we ever were was when we got rejected at the Pulse X sacrifice phase off the 36 cent level. That was basically it. That was basically like somebody got pissed because people were freaking out on socials. And then those days are long gone. We've been in a volatility squeeze on negative sentiment for 9 months, 10 months, and we just had an all-time high reading on bullish sentiment. People figured it out. Like, this thing's gonna go higher. And then down the bottom panel, just to add to that, there's been a huge influx of new social contributors. One of them's a whale chart. I'm sure tweeting out to his 100,000 plus followers. And there's other things that's leading into this where new people are entering, and it's causing the social metrics to change. We've never had a spike that high on new people coming in, or like, dominance spiked up too here, but it's got more to go. Like, we were more dominant in social here. People are talking more about getting their bags wrecked right now, probably even to, you know what I mean? But Bitcoin ETH charts and all them. But yeah, just something to note that the sentiment's picking up. People are happy, and things are going well for Hexicans right now, coming into this Pulse Chain launch. All right, so this is the Hex airdrops chart. Over the last few months, we've been getting Hexicans that have been staked. Have been getting like free money out there, wazoo. Like, you look here on the chart 58. All right, first let me point out Hedron Crypto. You guys are like, I get like you need money and stuff, but like, what happened to the Hex or the Hedron price chart is like I can't even believe like that happened. I mean, Hex did a similar move in the beginning, so I guess it makes sense. But the FUD around that wall, I mean, man, that slowed it down. So now you got this like crazy generational buying opportunity down here in the original price points. If we would have never had that hyperbolic move on Hedron and we would have just been chilling going inside of this band, we'd still be up from where we were in March now. So it's like, it's all perspective with markets. Okay. And the other thing I want to make you realize is that Hedron's saying staking might be coming for Hedron on Pulse Chain. So that's cool. That's bullish, right? And then if you look at the top 100 holders on Hedron, chart 58D over here, bottom left, there's $50,000. It only costs $50,000 to get into the top 100. You could buy billions of these things now before we get the next one of these, because inevitably anything tied to the share rate is going to follow the share rate. It's just a matter of input in, input out. Like, it's strong hands will accumulate billions and billions of these, round up to 4 zeros. It's not rocket science. And here I have a theory in the middle chart here, chart 58B, middle chart. It's the hex versus hedron chart, so they're valued against each other in a cross. When it had its exponential run, it ran up, and ever since then, we've been going in a rising, ascending triangle. It's testament to hex strength and a testament to how weak-handed you fucking plebs are. And what I think is happening is this is gonna double top, or maybe it continues to rise, because hedron will do well when hex is in a bull market, and it will, and theoretically for the short time here, it might not do well no matter what until hex is really making gains, because it's easy, or pulse chain launches and people are making gains over there and they can flip into this. But I just want to point out that if you compare this is basically like saying hedron dominance versus hex. You compare that to Bitcoin dominance, chart 58C below. In the very beginning of Bitcoin, 2014, 15, 16, it also created a similar upwards pattern before 3 years later falling off a cliff. And we all know what happened next. We know where Bitcoin is today, and we know how many other coins exist in the marketplace that shifted the sentiment around all Bitcoin's all that exists, right? Because new things came out. Technology, software evolves. So something to keep in mind, that hedron may make gains on hex again one day, but it'll be in a bullish hex environment. Pulse Dogecoin. Thanks for the free money, folks. It's in an upward trend. There's 2 major people supporting it right now as far as liquidity providing and protecting price and keeping it going higher. It only costs $10,000 to get into the top 50 holders, and this thing, if the people that are rallying behind this thing right now want to take it a lot higher, it doesn't take a lot of dollars, and there's really, the distribution is pretty even, so it could continue in like a trend like this for a while, I feel like, before it continues to go up. But I think it would be hurt by a weak hex, which we're not there right now. So just something to think about. I don't know if you guys really want to comment on alts. Do you?
Yeah, the only comment I have on alts is just remember, so what Axis is giving actually really good insight on is smart buying, right? So with a lot of the altcoin speculation in the market, what usually happens is there's a big price run up, and then for certain coins where it just doesn't have like the network effects or sustainability, as I know a lot of you guys saw from the last cycle, a lot of those coins didn't make it, and there's a lot of people that are still trying to recover holding some of those assets. And as I mentioned with the altcoin speculation, most of the coins you see in the top 100 won't be here in 4 to 5 years. So when you're speculating on low caps and such, I always recommendations, low percentage bets, smart buying, and this is a very good, what Axis is telling you is like what Axis is a smart buyer. So he's just going into the thought process of how that looks like in practice. And then of course always remember what the alpha assets are. So on Ethereum, ETH is usually the coin where a lot of ERCs get sold into, and that becomes sort of the native asset at play here. And there's a really cool chart that Axis has where I'll save the second half of that comment for that slide.
That's good.
What I'll say is that people just really need to do more homework. Markets are markets, right? And that's kind of sounds kind of like a trivial statement, but there's a whole lot to unpack in that statement. What you see in a chart never tells you the whole story. You have to understand why charts are doing what they're doing. And I know people like to kind of act like technical analysis is the end all and be all, but it's really not. If you don't realize why a chart could be doing something, then you don't actually have any insight into why it's doing what it's doing. It's just doing it. So
I
you
think you're
have
speaking on. I think you're speaking on basically like certain like first principles, like distribution, how they're distributed, how many holders are there. Like you got to know the underlying data behind these things if you're going to start to speculate on these things. I think is what you're trying to say.
yeah, I mean, I guess the point is you got to have a strategy in mind before you approach markets, right? Whether it's a alt or an actual coin with product market fit. You have to have a strategy in mind before you attack that market. Otherwise, the market might teach you a lesson that you don't want to learn in that fashion. In that fashion.
I got whooped on Hedron. I wrote it all the way up and all the way down.
And there you go.
All right, moving on. Maximus. Thank you, Gold Key and Dipcatcher. You two are awesome. I met them in Vegas last year when Wales and I and Patrick were all out in Vegas chilling, drinking by the pool and talking about Hex when we were only at like 5, 6 cents. So
Yeah, literally.
these guys, they I told Gold, I think I made a tweet like a year ago. I was like, Gold Key is the next big thing in Hex. And dude, it actually dude, they did a great job. They had a huge fundraiser or minting phase and they took so much hex supply off the market and created like a premium on a token that now Hex has to chase the premium. It's a beautiful system. I underappreciated it at first, and then after seeing the way like people are interacting with it, it I like it. I like it a lot. I think it's good, and I think that these things could be done, on a 3 to 6 month basis, yearly basis, to continue to create value outside of selling Hex, and also, you know, it was a good thing. I just want to point your attention to here you have on the bottom left chart 61. It's just Hex versus Maxi versus Hex. So in the beginning, it was like basically 1-to-1 parity, and then you had your crazy parabolic move to get that. I think it was like a 25% premium at one point, and I don't have the chart up right now. It's probably doing okay, but yeah, just an incredible thing. Congratulations, guys. What else do I have to say? Just to note that there is going to be times when it's going to overperform to the downside too. If Hex goes into a bear market, it doesn't look like that right now, but just be aware. I'm not saying dump it or do this or that. I'm not saying to do anything. I'm just saying look at this chart, look at the green line, where the treasury is going to go. Look at where the blue line, where the price could be. It's just simple. People love expensive shit, and nothing tells that more true than when you put the amount of stakers that we put on during the bull run at 50 cents. Look at how many people bought and staked. This is where your long-term believers are made. They didn't know what Hex was. They found out about it, and then they got scared because they didn't have any. So they staked. And guess what? That bad behavior, terrible trading behavior, is going to end up paying them more money than trading for 50% more a year for the rest of their lives. It's crazy to me. Like, what a mistake when a new player comes into the space and makes a mistake in Hex. As long as they hold to their guns, they will win, and they will win by a huge magnitude. Because what, you think that there isn't going to be a next wave of people that comes and stakes a shitload at the next high? Yeah. Okay. Comments? Wheels?
Sorry,
muted.
man. I was on mute. Yeah, my bad. But yeah, great anecdote, great comment, because it's true, right? How do we learn to become prophets of delaying gratification? Because that's what we all are, right? Anybody in Hex kind of is a prophet for that message. We're trying to spread the good word. Delay gratification. Now, why? Because doing a lot of pointless activity does not necessarily generate positive outcomes. Inputs generate outputs. So if you're putting crap in, you get crap out. Pretty simple.
All right, now we get to get into some pulse chain stuff. I'm going to leave the floor open for this slide because we all probably going to have opinions on these two things. Chart 64 on the left, I just wanted to make sure that everyone was clear that these are parallel and complementary blockchains, the Ethereum stack and the Pulse chain stack. And the guy that is in there before the fork and has both assets, like that's the guy that gets the most leverage and flexibility moving forward and will win this game harder than the guy that has to buy Hex on PHEX in a year at whatever price, right? So really now is the time. Get off the sitting down and being lazy and stuff and learn this stuff. And I know a lot of you guys that's watching right now at midnight is probably well aware of like some of this stuff, but for anybody new that's watching, this chart 65 on the right is Ethereum's launch. It tanked 80%, 88%, rose higher almost immediately, and then sold down. We've seen this pattern before, many times. And then the market operator started accumulating, pushed it up and started accumulating, and then you had within 188 days you had to move to a 700% move. Now the question becomes, and we can discuss it, is do you get an inverse relationship to this? Do you get the same relationship? Do you just go vertical because there's so much pent up demand waiting to buy Pulse Chain? Those are the questions we ask ourselves.
Well, the answer is simple. The answer is math. Never fails. That's how we got here in the first place, right? So
yeah. So in the case of what Wales means by it when he says the answer is math, it's like, okay, like what, 60,000 people sacked for PulseX and like 25 or 30,000 sacked for Pulse Chain, and there's 8 billion people. It's a math problem. There's 8 billion people looking for yield, and only like 120,000 people, some of them which are the same person, sacrificed for this new blockchain. Like, low imbalance equation much? Like the money's going to flow onto a chain that works faster, works harder, more transactions per second. It's proof of stake, so it's healthier. All these things that Pulse Chain did so well. I can't wait. I kicked ass on the test net. I like freaking 100x my bag over there. But we're all good though. It's just I can't wait for that. I'm gonna be kind of honestly, like, no offense to some of you Hexicans out there, but I think a lot of you guys are pretty dumb with your Hex. So like, if that's any indication, there'll probably be opportunities on Pulse Chain.
Yeah.
100%. Look, I've been saying this for a while now, but I'm gonna say it again. Pulse Chain is gonna show who just got lucky with Hex and who actually has analytical skill. Simply put, because there's not gonna be any outs now. It's not just Hex anymore, right? Now people are believing all this hype surrounding all these funky little projects that don't even got anything on testnet. So you keep hanging your hat on a rack that ain't there if you want. Good luck to you with that one.
Yeah, and what a lot of people are not realizing with Pulse Chain. So let me actually first start with other EVMs in the market so that there's a clear understanding of the big difference and the game changer from my viewpoint after Pulse Chain launches. So when you look at EVMs like Matic and Phantom, so there are two EVMs in the market, because those chains only have just the native asset, those coins end up getting dumped into Ethereum. So Ethereum is basically a vampire to those two instances of EVMs. Not as bad as the ERC20s, but to a smaller extent. Now, the big difference when Pulse Chain launches is that this is the first chain with a store value that's already attached to it. That has never happened before, and that's completely unique and new of its kind. So a lot of people are sort of underestimating the overall reflexivity that's going to that will result between PulseX, Hex, and having that, bringing that energy over from the get-go is going to be massive. And I read comments on Twitter, suggesting that Hex was just going to disappear, not realizing what is actually taking place after
God.
after Pulse Chain launches.
Yo, look, I'm over here just trying to contain myself because I'm trying not to interrupt you, man. But wow. Yo, can I just say underestimated? Like underestimating is a nice way of putting it.
Yeah. Yeah.
It's borderline hilarious. All right.
Yeah.
I mean, all right. This is software, people. We must reiterate once
I mean, we all know
again,
the gas fee problem, right? Like, we know that exists, right? And we know that there's a solution coming, right? Okay.
like hold on. So automatically 40% yield is irrelevant because there's some new coin. Is that how it works? Is that why all these people are out here getting wrecked?
Oh, we're gonna get to that, Wells.
Before
Yeah.
the
And
can
like,
even
we're gonna
test
bring
out?
that all home to roost.
Yo, it's
You
gonna
know.
be Piranha City.
You guys understand that like
Mhm.
Oh my God.
65% of all the SAC balances came from Hex, right? Like, who holds the pulse and PulseX?
Good
Like,
luck.
hello, you know.
Good
What do
luck.
they want to do with their money? Do they want T-shares?
Well, hold on.
Hmm.
What are they all gonna do once Pulse Chain launches?
Oh, they're gonna flip. They're gonna be like, oh, quick gains. They're like, oh, quick gains.
That's what they're saying now.
Mhm.
But odds are they're gonna do what? Buy more Pulse Chain because most of these motherfuckers ain't got none.
Oh yeah, that's what I meant. Flip Hex into Pulse Chain, PulseX. So they want to see the quick return.
My bad, I didn't hear that part. Sorry.
Yeah, no, they're. I mean, I'm not saying that's a bad. You probably make a lot of money doing that, but you're taking a huge risk.
But that's the point.
Yeah.
Where
You're gonna literally risk at 40% APY on a T-share over some
where
quick
are those
1,000,
gains
10,000%.
gonna come back to? Because there's nowhere else to go unless somebody makes something that's magically better than Hex to the point that you don't die. I just don't see what could replace it.
And the contract literally takes your. I don't want to get too metaphysical with it because I think a lot of people like poo-poo that, but like the fact that you can take your time and get a guaranteed immutable yield on it.
Yeah.
You know what that really means? It means you're putting your life force energy into something that is secure in a way that can reward your same physical self in 10 or 15 years by so many magnitudes more, just by the nature of the perpetuating of the getting late, guys. Continuation of the protocol. I'm gonna get off this slide. This was just pulled these. This is kind of funny. I just pulled this. I don't know. I think that this was on Crypto 7 or Hex Tokens YouTube channel. They had a video here. I think that was one of those guys, but I'm not sure. I can't remember. But thanks to them. Chart 66, X returns based on investor size. And then it just shows like how much you would have sacrificed for Pulse Chain and then kind of what the returns would look like on a curve. I mean, this thing, here's your S curve. And here's where the consolidation happens anywhere above a 20x. So, you take what you will from that. And then on the chart 66B, this is so Jim Cramer, MSNBC, right? I think he's a stock guy. He talks stocks. Dude, if you would have took every single call Jim Cramer ever made and did the opposite, you would have been fucking up big time until the market crash. What does that tell you about public perception and what the public eye sees? It's not what the market thinks. The market isn't the majority. The market is the smart money, which is a minority. So hello, people watching TV, dude, get off that shit. Moving on. We're getting to the end of the slides here, guys. I brought this up not to go through every single little step of what this is. What this is, first off, is a strategy for how to farm yield on Pulse Chain using Hex, Hedron, Pulse Chain, PulseX, liquid loans, all sorts of variables, that party redemption token or whatever. There's layers to this, and this is something you'll want to study on your own, but I just brought it here because look at all these routes to earn yield. All of these routes. It's amazing to me. Like call it the red squirrel forever farm, because you could theoretically be on a long enough time frame that the dollar price will never matter, because remember from the beginning of the conversation, people someday are going to flip and start denominating the world in crypto permanently. and they're not going to denominate the world in US dollars anymore. It might not be for 80 years, or it might be in like 20 years. It's hyperinflation does weird things to people. You know what I mean? When you can't get your food because a wheelbarrow of paper doesn't fucking pay for it, like people do get like things change quickly. So just don't count out the possibilities. We live in the technology age and the information age, and things are moving at a rate faster than any of us can compound and put into our own minds at once. Like, just see what you can see, stay in your lane, master it. You know, if this is too much for you, don't worry about it. Just stake Hex. It's literally going to do it might even outperform it. We don't know. But I think staking Hex is like my favorite thing because I don't have to do any of this. But that's just me. But I'm just bringing this to your attention so you guys can look into this and just find ways to make money off this shit. Anybody else want to comment on that?
Yeah, this is cool that you brought this up. So if you guys are farming yields, just make sure you know what you're doing. And you just understand this isn't related to the red squirrel schematic here, but just in general, a lot of you are going to learn, and even just as we were discussing how things are going to work on Pulse Chain, there's a lot of people. I mean, it's already amazing. There's just even before Pulse Chain launched, there was already people that lost all their Hex chasing coins. But just imagine once there's yield farming and all sorts of different coins that lead to like a lot of speculation. Just be mindful to what you end up, how you end up using your assets, and just understand things. And then there's of course a reason why schematics like this and things that have more like thought process and insight into it are advantageous if you're serious about just making the best opportunity after Pulse Chain launches. But yeah, this is a cool schematic, and then it's nice seeing all the infrastructure just start to launch. So as Axis and Wales mentioned earlier with Maximus, there's going to be all sorts of tools that allow you to make it's very powerful. It's very, very powerful. So seeing that even moments at this point, I mean, the summer months are going to be. I'm just excited for the summer months, man. It's going to be great.
What do you think, Wales? I know what you think. It's all math. Where's the money going to come back to?
Sorry, it was muted again. Well, look, one thing I will say is that if you are going to be providing liquidity, yield farming, whatever you want to call it, understand the risk that you're taking, and do not think that it's some liberal thing to do with your entire bag. That's something that you should be taking a piece of your bag with, or taking a piece of your bag and using it for that. Because once you put that on the market, you don't know what you're getting back. Period.
Yep.
Period.
I like that. I'm a safe player, so we got 2 more slides left, guys.
Yeah, I don't really care for all the complexity and all that. Less is more in my book.
All right, so I kind of want to have a little fun with this one. Welcome to Rack Space, where we get to look at people's tweets all day and mention and bring them up, call them out a little bit. So I got a tweet here in the upper left corner, tweet 4. We got Rackham Rochelle 9 hours ago. He said that the whole 20-cent hex price isn't really working out for him, and the goat's about to do some work. Well, I see some green candles, so something's going on over there. Down below that, you got Silver the Antidote coming in with how some traders got wrecked. Do not trade crypto, and if you do not, I would just suggest don't trade, I guess, because that's generally who I'm speaking to. You can earn enough yield in Hex and Pulse Chain staking and pooling that I don't see why you would need to trade. These are long-term plays. Top mid, you got Victor over there. He was running some numbers on Hex daily stats. He said on average, we are having 389 new Hex wallets a day, and half of those are staking. So that's pretty cool. I mean, your people are coming in, half are traders or half are holders of liquid and half are stake. So it's probably like 50% staking, and then the 25% trying to trade it, and 25% trying to hold liquid for higher price, like much higher prices. Just speculation. That comes out to be 6.5 new stakes per hour. But I think we can get that to 20 stakes per hour. I think we can get that to 30 stakes per hour. We just don't. Our user base is very small, and it's Hex McKenzie shows you in tweet 8. I reached out to her the other day and I told her like we got to get a countdown going to 100,000 stakers because it's coming up, and all you guys are retweeting and liking that. I just want every time she posts that, might do an update. Every 1,000 she might do an update. Just get that word out there that we're closing in on that 100,000 stakers. Upper right corner, we got Moon King D Roots, one of the big. He's a Hex influencer, but he just he ventures off into the woods a little bit, and he said he just wanted to remind everyone that about how all the OG Hexicans acted in the last 200 days. That the ones that said $29 Hex by end of year 2021, the ones that stopped talking about Hex and started talking politics, he says you are going to see them stream again with confidence as price goes up. It's called the maxi cycle. No, dude, it's called Hex is fucking amazing, and it's controlled by immutable. It's not controlled. It's completely immutable code that gives you a consistent 40% yield year over year. We're literally here streaming at the bottom of a double bottom. Like anyone that says this kind of stuff, like go look at the charts of the coins that he promotes. Period. Enough said. Last tweet 10. Hexologist says, I just gotta say that big ass monthly bull flag, baby. It's looking fucking amazing. And dude, I could not agree more, baby. A couple more. Okay, so this is just a chart showing you the kind of like the reflexivity of the Hex ecosystem. So today, if you take a look, bottom right corner, chart 69B and 69C, those are Hex Whalebot notifications that there was a $10 million market dump today. As you can see here, we found support on the 382, and now we're actually climbing. And we're heading for the 0.5 right now. So the interesting thing was when this spike down happened, it affected everything that was basically leveraged Hex. Maxi took a hit, but it's kept its premium, which is interesting to note. Hedron took a massive hit and gave a huge buying opportunity at 6 zeros. That's gone now, or in contention. And then it held support on the Hex ETH pair too. Held support. Yeah, it's just something to note. Like if Hex isn't super bullish, or if a Hex there are downside risks. Like if Hex goes into a bear market after whatever the bull market's over, expect this price action on these. Where do you think this money's going to go? Right here. Baked. Right here. That's the whole point of those coins. Got a final message for you guys. It's from Silver the Antidote. Quote, do not be disillusioned into thinking either of these new bolt-on tokens will overrule the king. It is my humble opinion these are tools used to revert back full flow of capital tides from a wider space into the true sense of why Hex was created in the first place.